Yes, good morning, guys. Let's take the discussion from the top. We were discussing about the basics yesterday. Yeah, we were trying to understand what exactly do you mean by a law, by a tax, and by direct in the taxes. We came and spoke about the fact that when you have a law, it's called as a rules and a regulations, which is drafted by anyone. When it comes to taxes, taxes is basically a charge which is levied on your income, expenses, consumption, goods, and services. It is only levied by an authority of law because the powers are coming from article number 265 of the Constitution of India. Yes, 246 article of Constitution of India comes and tells you which of the three list will have the taxes to be levied: central tax, state tax, or concurrent taxes. Income tax, which we are discussing about, is a part of central tax. Your agricultural taxes are part of state taxes. This is what we discussed in the previous classes. Yes, apart from that, we went forward and we came and discussed what is the difference between direct tax and indirect tax. In our conclusion, we came and concluded that if it's a tax levied on income, it is direct. If it's a tax levied on expense and consumption, it is indirect. Then we moved on forward and we tried to understand what exactly is the difference between a law and an act. We came and spoke about the fact that law is bigger than the act. Law is bigger than the act and therefore includes inside its act, rules, circulars, notifications, and case laws. We came and spoke that when it comes to act, in your syllabus, you currently have Income Tax Act 1961 amended by Finance Act 2024 along with Finance number 2 Act 2024. That is what you have. In rules, you have something called as Income Tax Rules 1962. You then have circulars also, you have notifications also, and finally you have case laws, where you will be discussing specifically about case laws relating to High Court and Supreme Court. But the appellate process is right from CIT appeals to ITAT, then High Court, and then Supreme Court. This is where we ended our discussion in the last class. Yes or no? Yes. We also try to understand that if you have to read a law, then you have certain categories inside a law. You have something called sections, you have something called subsections, clause, subclause, items, sub-items. This is what is there. If it comes to rules, the logic is the same except for the fact that sections will now become rules. So it is rule, sub-rule, clause, subclause, item, and sub-item. That is how it goes in rules also. We came and spoke about the fact that, Rahul, you also have something called as provisos. You also have something called as explanations. There is something called non-obstante clauses and there is something called subject to clauses. There is something called subject to clauses. All this has to be remembered from your reading perspective. Yes. After that, we moved on forward and we came and spoke about the fact that you have circulars and notifications, where which one is binding on department? Both are binding on department, whereas notifications is binding only on assessee, meaning it's not binding on department. Sorry, circulars is not binding on department. Circulars is not binding on assessees. Some confusion. Yes, whatever it is. Point is, this is what your discussion ended up with. Yes, yes. Apart from that, we also came and spoke about the fact that if you're going to look at CITs, you can also have an alternate route called as DRP. Yes, when you look at Income Tax Act starts with section number 1, which is your which is your short title, extent, and commencement. Starts with Income Tax Act 1961, is applying to the whole of India and is applicable right from 1st April 1962. Reason of 1962 is because income tax is written in assessment year terms, whereas if it is an administrative provision, it is read from financial year terms. This is what we ended our discussion with. Yes or no? Yes or no? Yes. This is what our discussion was. Now, just in case you are going from a practical standpoint and you're going to look at case laws, you should know that, Rahul, if I look at a case law, which is the authority which has passed the order? Yes or no? And therefore, what has happened is that there is a specified format which is designed. Basically, it's called the citation number. It's called as your citation number. This citation number will help you clarify as to who has passed the order. Yes or no? Yes or no? Yes. For example, if you look at CIT, any guesses, people, how does a citation look like? Any idea how does citation look like? Have you seen orders in the past? Never worded. Okay. Nowadays, CIT order will always have a DIN in it. A document identification number will be given to it. They'll be having a DIN in it. Earlier in those times, they always used to have something called as ITA number. So it will start with something called as ITA number. Let's say, for example, 217 of 2021. It means that the order which is being passed is the appeal number 217, which was passed in the year. It was appealed in the year 2021. It is the year in which the person has given you the number. Okay, so let's say, for example, that you filed an appeal in 2020. He would have taken it up for hearing in 2021. First notice would have been given. The date on which he takes up the hearing, that is the date when he'll assign a number. And that is the date he'll put inside it. Does not mean that he will pass the order in 2021. He'll pass the order 10 years later also. Yes or no? But the order will be shown as ITA number 217 of 2021. Yes or no? Yes or no? Yes. If you go to ITAT, Rahul, it first starts with the state where it is from. It first starts with the state where it is from. So generally it will start like MDS. MDS is Madras. Yes, it's called as MDS. Nowadays it is starting to call as CHN, which is Chennai. Yes, so they'll start with that, then you'll have a number to it. Then they'll have a number to it. Again, there'll be a year to it. This is the year in which it was taken up for hearing. This is the year in which it was taken up for hearing. Correct, not correct? Correct, not correct? Yes. Then you have something called as high courts. In high courts, how will it look like? It will first have the year. It will first have the year. Then it will have. It will be in this format. There will be a number. Then there will be ITA, and then there will be a number. Yes, there will be a number, ITA, and the number. Any guesses? Why? Which is what? This is the volume number, meaning the book in which you will find the case law. The book in which you will find the case law. ITA is called Income Tax Appeal. It's called Income Tax Appeal, and this is your page number. This is your page number. People, please understand, any case law which is passed is also published in the Gazette and all those things. They'll create special books for you. Yes, you have two options. Either you can go to Taxman, you can go to TMI, and you can watch the appeal there, or you can go for a physical book. Yes or no? When you go to an income tax tribunal, if you go to High Court and all, they'll have this big library. In that library, all books will be there. Yes or no? So you can pull out the book. For that, you need to know which volume you are booking. Yes. So if you look at let's say for example, the volume is 201. You will go and look for volume number 201. Pull out the book. Turn to page number 500, for example. That will be your case law page. That will be your case law page. So it's volume number, citation, and then case law. And then case law. Clear enough? Yes. Sometimes it is also noticed that it is not given as ITR. It is not given as ITA. It is called ITR also. Yes, it can be ITA or ITR. It's not income tax return. It is income tax reference. It is income tax reference. Yes or no? Yes or no? The same format will follow for Supreme Court also. The same format will follow for Supreme Court also, unless and until you have filed something called as a writ petition or a SLP. In that case, the format will look like WP number. It will start as WP number, whatever the number is, /2021, for example. In that case, they are coming and saying this is writ petition number so and so / so and so so and so. And if it is SLP, it will be called as SLP number / so and so. Yes, this is what the whole format is, people. The reason I'm telling you this is because when you go to Taxman also, and if you like try to search a case law, there are two ways to do it. One, you look for the party name. Other is there is an option called advanced filter. If you click on the advanced filter, they'll come and tell me the citation number. And the citation number, they'll come and say volume, reference, and then page number. If you jumble volume and page number, you will not get the answer itself. You'll then show no records found. Yes, so you need to be careful that the first item is your volume number, the last item is your page number. It is basically Taxman is a virtual library where they're using the same volume numbers, the same page numbers and all, but they're just giving you a different way. Yes, although yes, it's also true that when Taxman is publishing the case law, they will not publish it in the actual appeal number. They will put their own appeal numbers. They'll start with something called as 2024, some random number they'll put 321, taxman.com, and then they'll put some number. Yes, so when your taxman issues it, they will issue two citations. One will be actual citation, one will be their own citation. This is something which does by everyone. Yes, if you go to Tax Sutra also, Tax Sutra will start with TS and they'll give you something. When you go to TMI will also do something like that. Yes, so basically everyone has their own way to do it. It is all dependent on how you go for it. Yes, my recommendation always to people is that whenever you're going and quoting a case law in an appeal, always prefer to quote the original one. Always prefer to quote the original one, because you don't expect the judge to know what is taxman or a citation. It's not like he will go and press the taxman and get the case law. Yes, so it's always preferable to quote the actual citation, unless and until you have decided to put that as an annexure. If you're anyway going to give a printout, then it's not a problem, because then he has the printout on the back. But if you have not given a printout and you're just quoting a citation, never quote a taxman or a TMI citation, you will not get any reference for it. They may choose to ignore it because they don't have access to it. They have access to official portal itself, so they will not be bothered about paying money for taxman and all. And for those who know, taxman or a subscription and all is very costly. You're paying about 20,000 a year for one module. For income tax module itself, you will pay around 20,000 a year. That is if you're buying personal subscription. If you're buying a company subscription, all gone only. then you're paying lakhs and crores only. Yes, for one income tax module itself, you have to pay 20,000 rupees. That's like international tax, another 10,000 rupees. GST, another 15,000 rupees. That's company law, this law, that law, and all. They will take money out of you. Yes, and you can go to the official portal itself and get it out. You can actually go to Supreme Court or official portal, High Court or official portal, and you can download the court orders itself. The only thing is you'll have to use the original citations. Clear enough to go? Yes, this is what your case law looks like. Yes, great. We are moving on forward and we are going to the specifics of the subject now. We're going into the specifics of the subject now. We're going to start looking at what is called as Income Tax Act 1961. We've already discussed about what is section number 1. We are now moving to section number 2. Now I already clarified to you that section number 2 is your definition section and it always starts with clauses. It doesn't start with subsection. For those who don't know, but just to clarify, when you read a section of definitions, it is not created in your sequential manner of the book. It is created in alphabetical order. Even if the definition would be required in the page number 3, they will still find it in clause number 26, 27 maybe, because alphabetically it is there in that. Yes, the idea is very simple. Section number 2s are always created alphabetically, so that tomorrow if you want to know a word and you randomly search a word, you should be able to know that you should look before that or after that, and that can only happen if you look at it alphabetically. That is what the whole idea is. Yes or no? That is why sometimes what happens is when you have a definition of 224, for example income, and if you want to bring another definition in I, obviously 225 would have been taken up by someone else like J. In that case, you'll do 224A or 224B, something like that will start going on. Yes, it's because they want to make sure that it's done alphabetically. Otherwise, it's easy. They could have gone 235 something. Yes, but they don't want to do that because obviously they want to maintain it alphabetically. Confusion is bigger. Understand, for you people who are going to use it virtually, it is okay because you can just press Ctrl F, the number will come. Yes, but for the people who are going to read from an actual income tax act, they should have a convenience. They cannot go and search Google and spot it as search and tell me where it is. It won't come. Yes or no? So for them and all, it is made alphabetically. That is what the whole idea is. Yes. Now before I go forward, let me also clarify, Rahul, why are there definitions in section number 2? Why is it not given in the specific section itself? Any guesses? The idea is very simple, people. When you know a word and when you see a word, you should be able to ask yourself, Rahul, how much of the word is relevant? When you know a simple example in your inter, you would have learned there is something called as a definition of family. Now ask yourself a simple question. Rahul, family definition, you read only one definition in the whole income tax act, or you read multiple definitions? Now obviously when you read multiple definitions, can you put it in section number 2? You'll put it in the respective sections. Yes or no? Yes. So what income tax or basically any law comes and tells is, look at the word and ask yourself, do you want the word to be generalized or do you want the word to be specific? If you want the word to be specific, they will be put in the specific section where, very good, it will be put in the explanation to the sections. The explanation will come and say, for the purpose of this section, this meaning is so and so. This meaning is so and so. Yes. Now that definition is only applicable for the specific section. Rahul, can you use the same definition for another section? Not allowed. Then you will have to go for a general meaning, because understand, they very clearly came and said, for the purpose of this section, it is this definition, meaning it is not applicable for any other section. Yes or no? Yes. Now here is where the point is, Rahul. Assuming you want a word and the word has not been defined in the section, you will then look for section number 2, because then you will come and look for a definition in the general clause. Which is the section number 2. There you will find any definition. If you find the answer in section number 2, great. That is applicable to the whole of the act. Rahul, problem is it is not there in section number 2. You will now look for. You will move on to the next act which is passed in India called as General Clauses Act. This act is specifically designed to come and clarify that when there are certain items which are not defined in any specific section, I will give you an answer of what the items are. For example, when I came and told you what is the definition of he is not defined in any act, and therefore you will go and look for General Clauses Act, and there it will come and tell he means she. Example 3. Now I was looking for a word, the word is not there in general clauses also. Special act for the word. There is a special section act created for it, like Sale of Goods Act, Payment of Gratuity Act, where there is a defined, then you will go for those definitions. It is not there also. First of all, you cannot make your own meanings. Yes or no? This dictionary meaning will be identified by courts. Yes. At this moment, when you don't know what the definition is, the only option to get a definition is by going to court. is to going to court. You'll have to go to the judge and come and tell, dear judge, I don't know what the meaning of this is, you help me out. In that case, judge will now come and say, okay, it is not available anywhere, therefore I look for dictionary meaning, and therefore he will go and look for dictionary like Oxford, correct? Huh? He will look for a law dictionary. Yes, we will look at Black's law dictionaries and all those things. Those are the places where you will find law related meanings, and there you will go and check. There you will go and check. The problem has come up in a position where I don't even have the word in the laws dictionary, because in today's world, new generation, everyone is making short forms. What to do? It moves to the custom practice. It moves to customs practice. I'll give you a simple example, people. There was a time when what was happening is I was working in my office. Yes, and there was a big appeal coming up. So the appeal ka deadline was 30 days. Obviously, you know, CIT appeals deadline is 30 days. And so what happened is I had gone to my junior and I had come and told them that I have to file an appeal in 30 days. Help me out with the appeal document. Yes. Now what happened is 20 days later, I got a mail from the person. The mail said, hi Rahul, FYR. Hi Rahul, FYR. I looked at the mail, I ignored the mail, I left it off. Yes. 10 days later, appeal was not filed. Company made a loss, because we lost a demand of 1 crore. Condonation and all generally does not get accepted. You and I both understand that. Yes. So what happened? 1 crore ka demand came. We did not file an appeal also. 1 crore lost from the company. Now the management came to me and they came and said, Rahul, what the hell happened? Why did you not file the appeal? Why did we lose 1 crore money? I said, sir, I did not get the appeal documents itself. So I went to my junior and I came and said, dear junior, what the hell? Why is my appeal documents not with me? Why did we not file the appeal? She came and said, Rahul, 20 days munadi only I sent it to you, no? I was like, I didn't get anything. She then showed me the mail. The mail says, hi Rahul, FYR. FYR. I said, yeah, it says, hi Rahul, for your reference. It's for my reference only, no? Do I have to review it or file it or what? You said, Rahul, FYR means for your reference. So therefore I looked at it and I ignored it, because I thought you will prepare the final document and send it to me. Correct, not correct? Hey, at the end of the day, if I've given you the job, whose job is to file the appeal? Your job is to file the appeal. Is it my job to file the appeal? No, you should file the appeal. So I told for your reference, meaning I thought, okay, you have informed me that you have prepared the document, you will file the appeal. The person came and said, no, Rahul, FYR means for your review. Meaning I was waiting for you to give me a confirmation that the appeal document is proper so that I can file the appeal. Now we are stuck, because my CFO is standing on my neck and he's coming and saying, Rahul, 1 crore demand. Should I take from your salary or this salary? I don't have that much money. Definitely junior does not have that much money. Yes or no? Yes or no? The problem is when you use FIR and all, you don't know. FIR can mean for your reference, it can mean for your review. Now you and I both understand FIR is not defined in Income Tax Act. It's not defined in Section 2. It is not defined in general clauses. Definitely not defined in Black's dictionary. And Oxford is still not updated yet. Which means FIR will be found from common practice. Now question is now, common practice means common practice of India or common practice of my company? Because if you say common practice of India, I don't know. Will they do a survey? Will they go to all Gen Z people and come and say, dear Gen Z people, when you put FIR, tell me what is the meaning? They'll do a poll in India, do a survey for Rahul, correct? No. What will happen? They will come and say, Rahul, okay, bring all your management people and we'll discuss with the management as to what happens as FIR in your company. If your management comes and tells FIR means for your reference, it means Rahul won the case. Correct, not correct? Whereas if the management comes and says, no, Rahul, FIR means for your review, then I am gone. Then it is my job and my neck only. Correct, not correct? Correct, not correct? At that point of time, can my junior come and say, no, I came from another company where FIR means for your review? Possible? Not possible, because when she is working in my company, she has to follow my jargons. Correct, not correct? Correct, not correct? The point what I'm trying to make people is that sometimes when a definition is not given, don't come and say, Rahul, this is defined in US, so therefore I'll take US for the dictionary. No. You have to look for Indian customs. Because in India, marriage is okay. In US, live-in is also okay. Correct, not correct? Correct, not correct? Tomorrow, you cannot come in India and come and say, no, in US, live-in is permitted, therefore the live-in partner will also be given alimony. They'll throw you out of the court, nothing else. Although it's a different story, just now Supreme Court passed a judgment and they allowed it. That's where I wish you. Yes, the comedy is Supreme Court initially came and said, okay, live-in relationships, no alimony. And then 1 month later, they came and said, no, live-in relationship also alimony. I'm like, you itself are not clear what is live-in relationship, first of all. Correct, not correct? point what I'm trying to make people is customs is not something where you're going to do an earth survey and come back with an answer. You're going to look for a customs practice in the specific area because it depends on what you're talking about. Which means if you filed an appeal to High Court, the High Court will look only for customs practice in the state. But if you're filing an appeal to Supreme Court will look for customs practice in the whole of India. You understand what I'm saying? Yes. Look for the customs in your jurisdiction. Don't start looking at customs beyond the jurisdiction. It doesn't make any sense here. Yes or no? Yes or no? You clear with what I'm saying? Yes. Great. Let's go forward with that. We defined what is section number 2. We defined what is section number 2, which moves on to the next sections of the Income Tax Act. I will not be discussing section number 3 right now because that is not the charging section. We will start with the charging section, which is section number 4. Yes. Now in income tax, charging section number 4 is actually a very simple section. It has only 2 lines. Yes. But the 2 lines is the most complicated lines in the whole world. If you look at section number 4 comes and says income tax shall be charged on the total income which is earned by a person earned during the previous year at the rates in force and shall be accessible in the assessment year. 2 lines but 5 definitions. 2 lines but 5 definitions. You need to know all the 5 definitions. Now if you have done your inter properly, you will kind of know all the answers. But if you have not done your inter properly, that's what I am here for. Yes. Let's look at each item one by one. The first item which you're seeing is something called as person. Now you and I both understand persons are being defined in Income Tax Act. It is an inclusive definition. It starts with individual, HUF, company, firms including LLP, AOP, BOI, AJP and local authority. These are all the persons which are defined under Income Tax Act. Now you and I both understand what each meanings are. Yes, individual is basically a natural human being. You cannot cover inside robots and animals. They are not part of individuals yet. The moment they start getting sixth sense, artificial intelligence, maybe a conversation will change. But right now they are not covered. That brings you to the next person called as HUF, Hindu Undivided Family, where we are coming and saying a group of family members are together creating a HUF and they're making business out of it. It can be profession also. A simple straightforward question, people. How do you create an HUF? Okay, what is the basic requirement to create an HUF? Karta will come after you create an HUF. How do you create an HUF is my question. If you go to Income Tax Act and come and say I want to create an HUF, he will have to give you a PAN number. He will come and ask certain questions. No, give me this document as a proof. What and all do you need? What is the basic requirement of creating HUF, people? Rahul today can go and just go to Income Tax Department, come and say, Rahul, want to create an HUF called Rahul HUF. Allowed, not allowed? Allowed. Give? Like? I can give my Aadhaar card. No, why do I have to give birth certificate for that? If I give my Aadhaar card, they'll give me individual PAN. Why will they give me HUF PAN? I want an HUF PAN, people. For? Okay, so Ramana is going and giving a ration card for creating a HUF in the name of Ramana HUF or your father's HUF. You want to create an HUF. What is the requirement? Minor child. If you have a child only, you can have an HUF. You want to create an HUF. Forget your father. What is your family? Kashtagala. Marwadi people, you are. What is the basic requirement to create an HUF, people? It's very simple. You should get married. Full stop. The basic document required to create an HUF is to have a marriage certificate. Yes. In India, it's very simple. Family is nothing but self and spouse. No other requirement is required. If you have 2 people, that is enough for a family. Which means the basic requirement to get a PAN card in the name of HUF, you will have to get married. You'll have to get married. Kids, no kids, that's a choice. That's a choice. You cannot come and compel someone to have kids just to create an HUF. Yes, that's a different conversation then. You will have to compel someone to get married for that. That's a different conversation. Yes, the point is you will have to get married in order to create an HUF. If you get married, then you can create your own HUF and your parents can have a separate HUF. Perfectly legal because your parents obviously were married and therefore they have their own HUF. When you get married, you can create your own HUF. For all those who understand, HUF is just a dummy entity, only created in income tax for the purpose of avoiding taxes. Only created for the purpose of avoiding taxes. Keep some money with you, keep some money with HUF, both get slab rate benefit, both enjoy back tax rate. Yes, so therefore what people do, get married, create an HUF, part money comes to my account, part money comes to HUF account, both are paying no tax. Both are paying no tax. That is how the whole model works. That is how the whole model works, and therefore it is very simple in Income Tax Act where they come and say, Rahul, if you are going to furnish your marriage certificate, I will give you a HUF registration. Apart from that, there is no requirement. No Hindu Act, no Succession Act, no nothing. Give a marriage certificate, get a PAN card, matter is over. You have an HUF already in your place. Yes. After that, the question comes as, Rahul, how do you become a member of HUF? Okay. I'm going to. So Rahul, spouse, we created a HUF. Now we want to decide who will become a member of HUF. Yes. Question, Rahul, will my kid become a member of HUF? Son, daughter. Yes. Son or a son. Daughter or a son. Okay, utru. This first mana. Son or a husband, son or a wife. Daughter or a husband. Because outside family. So wife and son or a son. Okay, wife and son or a daughter. Okay, husband, daughter and husband or a son. No, because when the wife got married, she moved to another family and therefore the kid is also moved to another family. Parayadhan. Yes, so therefore not allowed. They are not part of the family, which means the only people who are part of the family is this side of the brackets. Is this side of the bracket. Apart from this, you can also have stepson, stepdaughters. In simple words, Rahul, how do you become a member of HUF? Either you are born into the family or you are brought into the family. When you're born into the family, then you are HUF. When you're brought into the family as son's wife or adopted kids, then it is brought into the family. Either one of the conditions, you become a member of HUF. The reason I'm telling you this is, people, because whenever a transaction happens between these parties, these are all exempt from gift tax. They're all exempt from gift tax, otherwise it is taxable. So which means if any husband of the daughter gives money to the HUF, it will become taxable because he is not a part of the HUF family. But the daughter's husband, if he gives money to the Karta directly, then it is exempt because now he's giving the money in individual capacity, and in individual capacity he is a family member. Yes or no? Yes. These are all ways to make sure that your taxes are saved, people. Yes, when you get money and all these things, always ask your question, who is getting the money? Sometimes if it is given to the HUF, it may become taxable, but if you give it in the individual capacity, it may not become taxable. These are all small things to keep in mind. Yes or no? Yes. At the same time, Rahul, when you have these two people, the wife, you have son and a daughter. This guy will also have a. Nano confused item. Sorry. Ambu color. Imagine a case where you have son, wife. You have a son and a wife. They both have a kid. Assuming a male kid. Yes, they have a male kid 1. They have a male kid 2. Yes. Now male kid 1 got married and has a son. Male kid 2 also got married and he has a son. So son 1 and son 2. Yes. Now the question is, Rahul, they both are planning to gift each other. Rahul, taxable, not taxable? Individual capacity. Taxable, not taxable? Quick, taxable, not taxable? I am telling son 1 is going to give gift to son 2, individual capacity. Taxable? Taxable? It is taxable because please understand, if I look from son 1's perspective, how is son 2 coming? He is my father's brother's son. Yes. Now, if you remember the family definition, father's brother is covered, but father's brother's son is not covered. Father's brother's son is not covered. Yes or no? Yes. But if this son gives money to the HUF, it is exempt. And if this son gives money to the HUF, it is exempt. So if son 1 gives money to HUF, it is exempt. If HUF gives money to son 2, it is correct. Correct. So if son 1 enters into a direct transaction with son 2, it becomes taxable. But if son 1 goes to the HUF and then gives it to the son 2, it becomes exempt. Yes or no? Because both are part of the members of the HUF. Both are part of members of HUF. Yes or no? Yes or no? This is all basically routings, people. This is how you siphon funds. This is how you siphon funds in order to make it exempt from tax. In order to make it exempt from tax. Creating a HUF is nothing but a tax mechanism. Yes, and it helps you in better ways. Helps you in better ways. So therefore, I always tell people, even if you're bored in life and do nothing with the HUF, might as well get a PAN card and keep. Might as well get a PAN card and keep. You never know when it will help. Yes or no? Because even if you end up giving direct payment to son 2, even if you end up giving direct payment to son 2, you can go tomorrow and come and tell income tax department it is still exempt because I was supposed to give it from HUF, but rather than going around, I gave it directly. Direct or indirect? Direct or indirect. So it's an indirect benefit given to him, therefore it is still exempt from tax. You can play whatever you want, people. Yes, at the end of the day, all this shenanigans you learned in interno, where they'll come and say if you get money from nephew, it is exempt, taxable. If you get money from niece and all, it is taxable. This is all on the books only. It is not practically possible. It is not practically possible. No one is offering taxes there. Yes, because they will come and say, boss, niece will give it to her mother and then mother will give it to me. Who the hell is going to pay taxes for all those nonsense? Yes or no? Yes or no? You may come and say, Rahul, marriage le kurta tax exempt. Ana marriage anniversary le kurta taxable. Who the hell has given any taxes on marriage anniversary gift? Pathirikingla. You get gifts on birthdays, you get gifts on marriage anniversary. Have you ever offered to tax? Chance illa. So no one is going to do it because it doesn't make sense. It doesn't make sense. Correct? Not correct? Correct? Not correct? Yes. All these summa things for you to understand from a practical standpoint, people. Clear enough? Clear enough? Yes. This is what the definition of a person is when it comes to HUF. When it comes to HUF. Then you have company, firms. Now when it comes to companies, Rahul, in income tax, there are three kinds of companies. Indian company, foreign company, one more. Domestic is having Indian company inside it. Companies which are situated outside India but have made arrangements to make dividend payments in India, or in simple words, domestic company or a second leg. Understand, actually there are two companies in India. One is called domestic company, one is called foreign company. But domestic company has two brackets. One is called Indian company and one is called companies making arrangements of distributing dividends in India. So technically there are three kinds of companies. One is Indian company, one is making distribution of dividends in India, and one is foreign companies. One is foreign companies. Yes or no? Yes. The thought which you came and said, Rahul, if you have a poem in India, does not make you a company. Yes. Whether you have a poem in India, even if you are a foreign company, you still pay tax at 35%. You still pay tax at 35%. Even if your poem is outside India, you will still pay tax at 35%. That is not a criteria itself. That is not a criteria itself. Clear enough? Clear enough? Clear enough? Yes. Next thing, you have something called as firm. You have something called as firm. Firm is two or more persons coming together with an intention to make profits by acting individual capacity or by acting in representation of other partners, which means there should be an intention to make profits. And when you speak about firms, income tax is also clarified that firm also includes LLPs defined under LLP Act 2008, except for a few sections like section 44AD and 44ADA, where they come and say, if I use the word firm, I don't use the word LLPs. Their firm means only unlimited liability firms. Otherwise, when you read the word firm, every firm includes LLPs. It includes LLPs. Yes or no? Yes. After firms, you have something called as AOPs and BOIs, Association of Persons and Body of Individuals. Basically, group of people coming together to do an activity. It can either be enforced by law or it can be done by mutual benefits. Requirement of an agreement is not mandatory. In practical world, requirement of agreement is mandatory, because income tax is very nice. Income tax comes and says, bloody, if you don't have an agreement inside an AOP, every person is taxable for MMR. And if you know MMR rates are 42.744%. So they'll come and say if you don't have an agreement inside the AOP which comes and tells you who's going to get how much profit share, everyone will pay tax at MMR. And therefore, in a practical world, every AOP will have a agreement in place defining the shares agreement. It's extremely mandatory. You may come and say from an actual theoretical perspective it is not mandatory, but in practical scenario you have to have an agreement defining what the share of profit is. We will discuss the topic of AOP, that time you'll understand better. Yes or no? Yes. Then you have something called BOI. BOI is the same as AOP, the only difference is the people who are there in BOI are only individuals. And then you have local authorities, your municipalities and all those things, and finally you have your artificial juridical person. Any examples, people? I say is body of individuals. It may be created by a law, but technically it's a group of individuals running it. AJB people, any idea? Examples? Warnings, motto get drinking. No idea? No idea? No idea? Take a simple example, people. Imagine there is a company going under liquidation. Court will have to appoint a liquidator. And the liquidator is given responsibility to sell all the assets and get money. Question to you. The assets which are sold and the money which is got will be taxable in the hands of company. True or false? Will be taxable in the hands of company. True or false? False, because company is stopped existence. The asset which is sold and the money which is got will be taxable in the hands of liquidator. True or false? True or false? False, because it is not his money. In which case it is clarified that the money which the liquidator gets on sale of liquidation of assets will be taxable in the capacity of a AJP. Income tax released a circular where they came and clarified that when a liquidator is appointed by income tax by the courts of NCLT, the liquidator will be receiving money in the capacity of an AJP, and therefore he will be taxable on it separately. Meaning he will not club his personal money. He will pay taxes twice. One in the name of his capacity and one in the name of liquidation capacity, which means now this person has to file 2 returns. Correct, not correct? Yes, this is an example of an AJP. Clear enough to go? Yes, these are small examples for you to keep in mind, because please understand, company cannot file returns. Company is already liquidated, so company cannot pay taxes. Liquidator will pay taxes in the capacity of an AJP. Clear enough? Yes. The funny thing is, here is where begs the question. The moment they released the circular, one big question came up in picture. Now that the liquidator is going to pay taxes in the capacity of AJP, can the liquidator come and raise a contention that can I pay taxes in slab rate model? Because understand, company has a tax rate of 30% or 25%, but AJP is taxable at slab rates. Correct, not correct? Yes or no? So I can always raise a contention right now that when a company liquidates and the assets which are received by the liquidator, the money which is received by the liquidator, he is liable to pay taxes only at slab rate model. Possible, not possible? Yes, there is no clear vision on it right now. A very good scenario for you to go back to your office and come and say, yes, let's go and place a contention that we will tax it at slab rate. You may definitely win the case. But it is litigative, no doubts about it. Because understand, at the end of the day, when you're doing slab rates, you're going to pay lesser taxes. Whereas it's a tax assets of company, then there is a different conversation to start. Yes, but can it be done? Definitely yes, because income tax itself is coming and clarifying that the asset is a AJP asset. Something for you to think over a cup of coffee. Clear enough? Yes, these are all your definition of a person. Can we go forward? Yes, sweet. What else do you have, Rahul? You have, after persons, you have something called as previous year in assessment year. Now, if you are in finals already, I am assuming I don't have to clarify this again and again for you. Previous year is basically the year in which you earn the income. Assessment year is the year in which you assess the income. Taxes are actually paid in TDS, advance tax and all those nonsense. So technically, the year in which you assess your income is your assessment year. Rahul, assessment year is lesser than 12 months. False. Assessment year is always for a period of 12 months. Can it be more than 12 months? Can assessment year be more than 12 months? Can assessment year be more than 12 months? No. Can assessment year be less than 12 months? No. Assessment year is always for a period of 12 months starting from April up to March. Rahul, can previous year be more than 12 months? Not possible. Can previous year be less than 12 months? How less can you be? Previous year can be as small as 1 day also. Previous year can be as small as 1 day also. It cannot go more than 12 months. It cannot go more than 12 months. People, please understand, in Companies Act, you have this concept of financial year, which comes and clarifies that if the company is created after January, you will consolidate the last 3 months along with the 12 months and PASA 15 months accounts. And PASA 15 months accounts, please understand that definition is only for Companies Act. In income tax, you will have to create 2 different books. You'll still have to create 2 different books, meaning even though you will take only 3 months there, for income tax purposes, you will create a books for 3 months, offer the losses, then create a book again for 12 months, then do it, which means in practical world, technically, if you ask me, no company does it. In practical world, no company does it. No company creates a books for 15 months because they know even if they create it for 15 months, they will again have to create 2 different books for income tax purposes. And the problem is, if you're going to create a books for income tax purpose, income tax will then come and say, get it audit also. Which means now you'll have to pay auditor twice the fee. One for 15 months, one for 12 months. Adhika, they'll come and say, might as well ignore Companies Act and directly do Income Tax Act. Please understand that, Rahul, in Companies Act, the 15 months criteria is not mandatory. It is optional. It is optional. They are coming and saying, if you want, you can do it. Which means people will normally say, I don't want, might as well let's do income tax, because income tax does not say you want, you can do it. Income tax says you have to do it. Correct, not correct? Correct, not correct? Yes. That is why normally in any India market also, no companies are now currently doing Jan to December model. Even though their holding company is going Jan to December. They will come and say, no, I will have to create 2 separate books to get 2 separate audits and everything. I might as well follow April to March. And therefore most companies have already started converting themselves into financial year terms. Yes or no? Yes or no? Yes or no? Yes, this is what the whole model practice is. Clear enough to go? Yes. Now, Rahul, what are the cases where a previous year will be less than 12 months? Newly started company. Next. Newly started business. Next. Sorry? Very good. Shut down in middle in the year. Next. First time source will only help you in advanced tax. It will not help you in changing your previous year. Next. No idea. Newly born in the current year. Minor child can also have incomes. Correct? Not correct? Yes or no? Minor child can also have incomes. You may come and say, me, Rahul, minor child income is getting clubbed in the hands of parents. Day. Handicapped child in the no clubbing. Which means if the kid is born handicapped and the parents or the family members are giving money to him, it will be taxable in the hands of child. For him, previous year will start only on the date on which he is. Correct? Not correct? Yes. So previous year can be lesser than 12 months also in case where you are existing in the current year newly, or you are exiting in the current year currently. Yes, you are exiting in the current year currently. In that case, previous year can be lesser also. In which case, you also know that, Rahul, there is a provision which comes and clarifies that, Rahul, previous year and assessment year are normally 2 different years. But in some cases, assessment year can become previous year also. Assessment year can become previous year also. In your inter, you would have only learned it as a technical definition. In finals, you learn it as a theory itself. Yes, there is a different chapter itself. You have a chapter itself on this where they will teach you what are the exceptions to the rule of previous year being different than assessment year. For your reference, Rahul, what are the 5 items? Individual leaving India with no intention of coming back. AOPBOI created in the current year, dissolved in the same year. A non-resident shipping company coming to India, leaving India will have to pay 7.5% of their revenue as taxes in India. Next. A business or profession is discontinued in the previous year. Last one is, you read it in Companies Act also. Lifting of corporate wheel. What are the reasons? Particular. A person deciding to sell, discharge, lease, or transfer his assets with an intention to evade taxes. And the scenario in which you will have to pay. And the scenario in which you will have to consider your previous year same as assessment year. I already remember giving you a story around it also. It's not important because you're in final, it look a little stupid, but just for my reference, the story is like this. Imagine a case where you have Mr. Vijay Mallya. Imagine a case where you have Mr. Vijay Mallya, who is right now running Kingfisher. Right now running Kingfisher, has bigger money in his hand, decides to go into F1 racing. Decides to go into F1 racing and is putting money in F1 racing, which means he's going to buy a team. Unfortunately, the money which he wants for F1 racing is very less. So he goes to his friend, Mr. Nirav Modi. Mr. Nirav Modi. They both come together and buy one F1 team. So they are coming together and they're buying an F1 team. Now the F1 team which is bought by a AOP or BOI. Is bought by an AOP or BOI, because both of them are coming together and doing it. Yes or no? Yes. They get into the F1 racing and all, and they lose huge money. They lose huge money. They don't have money to repay back, and therefore they decide to leave. They decide to leave India. They decide to leave India, run from India. Now, if they have to leave India, they have to get money. They have to get money. So they're trying to sell whatever is there. So first of all, they'll decide to close AOP BOI. Second, they will try to close their own business. So what he did, he went to Kingfisher and he decided to close Kingfisher. Now, if he's going to close Kingfisher, he'll have to liquidate the company. If you're going to liquidate the company, you'll have to sell all the assets. So he decided to sell all the assets. He decided to sell all the assets. Correct? Not correct? Yes. Now that he sold all the assets, he has money in his hand. He will now decide to leave India. He went and he called Indigo and came and said, I want a flight. He said, I will not give you because you are my competitor, or you were my competitor. Therefore, he went and he called Doraemon. He went and he called Doraemon. Doraemon came to India, brought a ship, took Vijay Mallya and left India. Took Vijay Mallya and left India. Yes or no? Yes. Rahul, what is the story, Rahul? First, AOP BOI created in the current year, demolished in the same year. Kingfisher, business or profession, discontinued in the previous year. Assets having in possession, sold off with an intention to evade taxes. With an intention to evade taxes. Calls Doraemon, non-resident shipping company coming to India, leaving India. Left India with no intention of. 5 scenarios. 5 scenarios. It does not get tested in finals. It gets tested more in inter. But yeah, nevertheless, good to know. Good to know. If you want, you can note down the story. Otherwise, it's not important. Clear enough to go? Yes. Yes. Great. This is what your definition is when it comes to previous year and assessment here. Previous year and assessment here. This brings you to the balance of the items, which is called rates in force. Rates in force is nothing but the rates which are given under Finance Act and Special Tax Regime. Finance Act and Special Tax Regime. All the rates which are given there, which is our subsequent chapter. Next chapter, we are going to discuss that only. So we can ignore that. That leaves you with assessable. That is what we discussed right now. Yes, assessable being previous year and assessment year being the same. But the thing in income taxes, income tax comes and clarifies that any person who's going to pay taxes in India is now not going to be called as person. He's going to be called as assessee. Now, to be very honest to you, assessee definition in income tax is a make and break definition. It's like a make and break definition. It is a definition which has been formed over ages. After every time you bought a definition, people found a different answer. Yes, and therefore they keep changing the definition. Let me clarify, Rahul. How does it work? You are telling that Rahul, assessee is the person who is liable to pay tax. So you're telling Rahul, if you're liable to pay tax, you are an assessee. There is a person, what happened is this person is not filed his return on time. But taxes is 0 because he's eligible for rebate. Because he did not file his return on time, he will be liable for late filing fee. So income tax department went to that guy and came and said, you're liable for late filing fee. Pay me 5,000 rupees. He said, I will not pay, get lost. He said, I will put you in jail if you don't pay. I said, you cannot do that because I am not an assessee. The only reason I am an assessee is because I am liable to pay tax. This is not a tax. This is a fee. And therefore I am not liable to called an assessee. Income tax changed the definition, and income tax said assessee means the person who is liable to pay tax or any sum under the act. Change number one. Now I went as an assessee. And what I did is I went and I told boss, my income should have been 1 crore. But I made my income as 1 lakh. My income should have been 1 crore, but I made my income as 1 lakh. I did all fraud and I made my income as 1 lakh. Assessing officer came to me and said, how the hell did you make it 1 lakh? You should have shown it as 1 crore and paid me tax. I said, sir, I know, but it doesn't matter because you cannot check me. You can only check me if I'm liable to pay tax or I'm liable to pay any sum. Looking at the 1 crore income, I am not liable to pay any tax. I am not liable to pay any tax. So which means you don't have the power to open me up for assessment. You don't have the power to. See, understand, if he opens up for assessment only, he can make it 1 crore. No. Until he opens up for assessment, it is only 1 lakh. Yes or no? So he said, sir, you cannot open me because I am not liable to pay tax. Correct, not correct? Correct, not correct? Definition is wrong. Definition is wrong. Again, amendment came. Again, amendment came. Now that amendment comes and says, assessee means any person who is liable to pay tax and any other sum, and includes and person on whom assessment proceedings are initiated, on whom assessment proceedings are initiated in respect of his income, in respect of his income. Correct, not correct? Correct, not correct? Rahul, definition is complete. Definition is complete. No. My income is 1 crore. My income is 1 crore. I showed my income as minus 2 lakhs. I showed my income as minus 2 lakhs. Assessing officer came and said, no, your income is 1 crore. I'm like, I know. He says, Appo, I'll put you in jail. I'm like, sir, you cannot do that because I am not an assessee. I'm not an assessee. You can check for me for tax. No tax. You can check for me for my other sum. No other sum. You can check for me for my income. No income. There is loss. Yes or no? Yes or no? Definition again got changed. Definition now comes and says, assessee includes any person liable to pay tax, liable to pay any other sum, includes a person in respect of whom proceedings are initiated for his income or losses. Income or losses. Correct, not correct? Correct, not correct? All definition is complete. No. Definition is still not complete. I filed a return. I filed a return. In that return, what happened is I came and told my tax is 0. My tax is 0, but I have paid TDS. Therefore, I am eligible for refund. I am eligible for refund. Assessing officer comes to me and comes and says, dear assessee, I want to check if you are liable for refund or not. Because you may have shown an income of 1 lakh, whereas you should have shown an income of 1 crore. I said, sir, you cannot do that because no income, no loss, no tax, no sum, only refund. Therefore, no assessee. Therefore, no assessee. Again, definition got changed. Now the definition says, who is liable for proceedings on his income or his losses or his refunds. At this position, they also came and said, Rahul, let me not complicate life. There is a chapter called as clubbing. And therefore, they said it is not just for his income. It is his income or any other income for which he is assessable. It is his losses or any other losses for which he is assessable. It is his refund or any other losses for which he is assessable. All this got included. And then finally, what happened? We came and said, Rahul, this is what the complete definition is. This is what the complete definition is. I said, okay. Next year, income tax department came and said, you have to pay TDS. You have to pay TDS for myself or for someone else. For someone else, I have to pay TDS. I said, sir, I will not pay. Get lost. I will not pay. Assessing officer said, no, I'm giving you a job to do. I'm like, sir, I don't want the job. He's like, I'm not asking, I'm telling. I'm like, sir, I'm also telling only, I will not do. He said, okay, let's go to jail. I said, I cannot go to jail because I'm not an assessee. This is not my income. This is not my loss. This is not my tax. This is not my refund. This is my expense. Correct, not correct? This is my expense. And therefore, definition again got changed. And they said it also now includes any assessee who's termed as an assessee in default. Any assessee who's termed as an assessee in default. When are you termed as assessee in default? When you don't pay your TDS. When you don't pay your TDS. Yes or no? Yes or no? Rahul, overall, what is the definition? Assessee is a person who is liable for tax, any other sum, includes a person whose in respect of whom and proceedings is initiated for his income, loss, refund, and includes any other person for whom he is assessable. It also includes an assessee who's termed as an assessee in super. This is what the definition of an assessee is. This is what the definition of an assessee is. Now, if you have defined the definition of assessee, income tax comes and says, okay, if there is an assessee, there should also be an assessing officer. There should also be an assessing officer. Income tax comes and says, assessing officer is the person who will make assessment for an assessee. Assessing officer is the person who will make assessment for an assessee. Which then brings to the question, Rahul, what is assessment? What is assessment? Assessment, people. Review. See, when you say review means you're coming and saying this is wrong. Then you don't have the power to change it. It's like verification. Assessment is nothing but verification of what the income is. There is a definition of assessment somewhere. Assessment means a procedure by which the income of an assessee is determined by the assessing officer. Yes, that is what the assessment definition is. Clear enough to go? Yes, great. This is the last definitions of yours on assessment and assessing officer along with assessable. Brings you to the last definition of what is called as total income. Now, before you start understanding what is total income, you first need to know what is income. What is income? Any idea, people, what is income? Income is an income as defined under section 224. Company is a company as defined under companies. Same thing. Yes, there is no definition of income. Income tax comes and says it is difficult for me to define what is an income because something may be income for you and something may not be income for you. And therefore, I am coming and saying if it is there in 224, then it is income. If it is not there in 224, it is not an income. Yes or no? In a common parlance, Rahul, what is an income? Income means revenue minus expense. Income means revenue minus expense. But in income tax, income means defined revenue minus allowable expense. It is defined revenue minus allowable expense. Defined revenue means revenue defined under same 224. Hey, understand, people, 224 does not define what is income. 224 defines what is revenue. And the subsequent chapters come and tell you if you can claim some deductions. So in simple words, income tax is coming and saying whatever you earn, everything is income. If you get 100 rupees revenue, 100 rupees revenue is income. But in that you can claim some deductions. And that is what is allowed. Therefore, income definition has been defined as defined revenue minus allowable expense. Defined revenue being income under 224 and expenses being those expenses allowed under chapter 4, chapter 6A and other. Basically in these two chapters, it is chapter 2, chapter 4 and chapter 6A. Chapter 2 about 10AA, chapter 4 about heads of income, and chapter 6A about deductions. This is where it happens. Yes or no? Yes. Rahul, why am I using this word specifically as allowable deductions? There is a very good story behind it. There was a time where what was happening is there was a person. I think his name was Qureshi something. There was a person called Qureshi something. This person was into the business of dealing drugs. Now what happened is this person was dealing drugs, and in certain day what happened is he was running his business properly. Crores and crores of money coming in. Suddenly what happened? One day there was a raid in the house. And the police officers came. Now obviously because this person was running this operation for a very long time, he was equipped with. So shooting and all started. In the middle of shooting and everything, what happened? The place got fire and the whole place burnt. Luckily Qureshi is also alive. The police officer is also alive. The police officer comes, takes Qureshi to jail and comes and says, dear Qureshi, for all these years on this illegal room, you did not pay taxes and therefore you are now liable to pay tax at the rate of 78%. 60 plus 25 plus 4. At the rate of 78%, you are liable to pay taxes to me. Qureshi said, yes sir, I am actually agreeing to it. I am ready to pay taxes. Sir, what is my profits? He said 500 crores. Who said? Officer said 500 crores. Qureshi said, no sir, my profit is minus 200 crores. Officer is like, how? This guy comes and says, sir, my revenue is 500 crores. The house which you burnt, no, there is a loss. Therefore, I want to set off my expenses. My expenses are 700 crores. Therefore, I am having a loss of 200 crores. Therefore, sir, do one thing. I have my regular legal income on which I already paid tax. Now that this illegal has also become identified, you do one thing. You take this 200 crores and set off against legal money. And then whatever tax I paid there, give me back as refund. refund. Now you are the judge. I explained the story. Judge will say allowed, not allowed. Judge will say allowed, not allowed. Judge will say allowed, not allowed. Judge said allowed. Judge said allowed because in those days income meant revenue minus expense. In those days income meant revenue minus expense. Is it an expense? Can you claim? Apo it is allowed. Apo it is allowed. So court came and said yes, allowed. Let him set off the money and then claim the refund. Which means doing illegal is good now. Because now you are getting refund of what tax you paid. You are getting refund of what tax you paid. Income tax department, happy, not happy? Decided to amendment. Decided to an amendment. Section 115B, no, 115BBE. Section 115BBE came into picture, and 115BBE came and clarified that going forward, whenever such unexplained income is into picture, no deduction of expenses can be claimed as deduction. No deduction of expenses can be claimed as deduction. So they came and clarified no expenses, no losses, no allowances, anything will be allowed against the expenses, which means you have to now pay tax on the full 500 crores. You'll have to pay tax on the full 500 crores. Problem with the definition now is that you are now going to pay tax on full revenue. You're going to pay tax on full revenue. Imagine a case, this person is planning to sell cocaine. He sold the cocaine for 100 rupees. Now he did not manufacture the cocaine. He bought the cocaine. He's a dealer, which means he would have bought the cocaine for 50 rupees. So he sold the cocaine for 100 rupees. He bought the cocaine for 50 rupees. The tax he has to pay 78% on full 100 rupees because no expenses allowed. Now this guy is going and telling, sir, I made profit only of 50 rupees. I only have money of 50 rupees. If you want, I'll give you full thing. He's saying, no, I want 78 because I want on full revenue. Now this guy is saying, sir, I don't have money because I made only. He said, great, give me your other assets. He said, sir, I don't have other assets also. Then declare bankrupt, go to jail. Problem with unexplained income is it is great as long as it is not found out. But the day you are caught, it's a nightmare. Because please understand, you're now paying 78% tax on revenue plus 10% penalty on tax. Which means technically you will end up paying 85.8%. You'll technically end up paying 85.8% of your revenue as tax to government. And after this, they'll come and say, boss, since you did not declare for such a long time, you will also have to go to jail. Now, all this if you have a legal business, but you did not declare. Basically, all are Marwadi people having cash in hand, not declaring. That is called black money. But imagine if you're in drug dealing business. Business itself is illegal, which means now another act will come and say, which act? Narcotics Act and Prevention of Money Laundering Act. They will also come and say, how are you selling illegal drugs? Therefore, they will also put penalty. Already you don't have money, now you have to put more money. Where? I don't know. You have to put money from somewhere. Yes, very difficult when you get into all those shenanigans. Don't try all those. Black Money Act will not come into picture, people. Black Money Act has been defined to only cover those taxes which are relating to black money outside India. Yes, income tax has made it very clear that if it's an illegal or unexplained income of India, then it is 78%. But if it is unexplained income of outside India, then it is Black Money Act, taxable at 30%. Yes, we will learn. When we go to the subject, we will learn that better. Yes, the comedy thing is, it's like if you are making unexplained in India, then you have to pay 78. But if you made unexplained income outside India, then it is 30 only. Means it is better to keep assets outside India. It is better to keep assets outside India. They are itself promoting that keep assets outside India, don't bring it to India. Some logic. Yes, some stupidity when it comes to Black Money Act, but we'll discuss. Technically, black money and income tax is fairly the same. Nothing different. The only thing is rate is changing. That's all. Yes. So when we discuss the act, we'll understand it better. Clear enough to go? Yes. Now, coming to the income definition, Rahul, I'm coming in clarifying. It is income minus allowable expenses. It is income minus allowable expenses. Some examples which you spoke about is unexplained income, lottery, all those cases like you don't get claims of expenses. I don't know how many of you are active on LinkedIn. There is this very famous story going on in LinkedIn right now. There was this KBC going on right now in Hindi, Kaun Banega Crorepati. Yes, in that what happened is there is a very poor guy who came from a very backward village. He came from a forest. He has money, only 260 rupees in his bank account. How much? 260 rupees in his bank account. This person came to KBC and played the game. 150 lakh rupees. Person who has never seen 260 kamala. His yearly income, and I'm saying yearly income, is 30,000 rupees. Imagine. That guy 150 lakh rupees. Now, one side of the people are coming and saying, great job. The other side of the people being CAs are writing posts in LinkedIn. It's a good thing that he won 50 lakh rupees, but it's also a good thing that he is only going to get 32 out of it. Because winnings kamala 30% tax plus surcharge plus cess plus surcharge plus cess. Now you may come and ask Rahul, surcharge every 50 lakhs correct than he has other income also. At best he'll get marginal relief. At best he'll get marginal relief, but at the end of the day he will have to pay full tax on that. He'll have to pay full tax on that. So he is paying tax plus surcharge plus cess on that winnings. On that winnings, which means 50 lakhs he earned, and he could have run his life for the next 10 years. But now he only has 32 lakhs to pay. He only has 32 lakhs to pay and buy things. Look at how ugly life is. Yes, they come and say income tax is progressive, but there is no progress here. Yes, because the most poorest of the persons are paying the same tax as richest of the persons. The rich person is also paying 30% on winnings, and the poor person is also paying 30% on winnings. Such a kind of demarcation is then not progressive in nature. Yes or no? That is why I told you people, progress and all is not a difference. It is an outcome. It is an outcome. You never know it is the right answer or not. Yes or no? Yes or no? Point I'm trying to make people is that sometimes this is how it works. This is how it works. Now, coming to the income definition once again, Rahul, just to clarify this once again to you. Income tax comes and says income is defined under section 224. Yes. Now, a very common understanding of income definition, income tax comes and says it's very simply defined. They come and say, Rahul, income will be categorized into two brackets. One will be called as capital receipts, one will be called as revenue receipts. And income tax comes and says if it is a revenue receipt, it is always taxable. If it is a revenue receipt, it is always taxable. Basically, if you go to 224, the first line of 224, subclause 1 of clause 24 of 2 comes and says any income earned out of business or profession, full stop. Any income earned out of business or profession, that's all is the income, which means they have itself come and clarified that if it's a revenue receipt, it is taxable. It is always taxable. But if it's a capital receipt, income tax comes and says then you have to look from subclause number 2 to subclause number 25, 26, whatever it is. Yes, where they're coming and clarifying that, Rahul, if it's a capital receipt, I will tell you whether it is taxable or not taxable. Who is I? 224. 224 will come and tell you. In simple words, Rahul, I'm coming and saying when it's an income definition, ask yourself whether it is revenue receipt or it is capital receipt. If you see it as a revenue receipt, it is always taxable. But if you see it as a capital receipt, it is taxable only if defined under income definition. Defined under income definition. Which then brings the question, Rahul, how do you identify whether something is revenue or something is capital? What is the basic checks? If it is more recurring, it is revenue. Then how do you differentiate?
If something is incurred or it is incurred or creating a source of income, that is capital.
If you are going to use an item for generating revenue, and if you sell that item itself, it is capital. But if you are going to sell the item itself to generate revenue, then it is receipt. Yes. For example, when you sell inventory, you are going to sell the inventory in order to make revenue. Therefore, that is revenue receipt. But if you sell the building, which is used to make the inventory, in that case, it is capital. Yes. Yes. Next. What else? What else? If you are going to sell this in the normal course of dealings, then it is revenue. But if you're selling it as a one-off item, it is capital. It is capital. Correct? Not correct? Correct. Finally, if you're going to sell shares, revenue, capital. On Simple. If it's a shares and securities, you will ask yourself, Rahul, tell me whether it is done as a stockbroker or done as a normal person. If it is done as a stockbroker, then it is. Otherwise, it is capital. Question, Rahul, I am into this business of F&O. Futures and options. Futures and options. I randomly keep selling. Now, I am not a stockbroker, meaning I am not selling it for someone else. I am doing it for my own self. I am doing it for my own self. Revenue or capital? Revenue, capital. You know what is F&O's, people? Futures and options. Yes, I am selling futures and options for my own profits. My own profits. I am not a broker. I'm not a broker. I am selling it for my own profits. Revenue, capital. I'm Summa doing it side hustle. Sorry? Revenue, capital. It is revenue. F&O is speculative transaction. F&O is a speculative transaction, will be categorized as speculative business. Will be categorized as speculative business, and therefore will go to revenue receipts. Will go to revenue receipts because F&O is where you are not doing with an underlying asset. We're not doing with an underlying asset, therefore it becomes a speculative business and therefore goes under PGBP and goes under PGBP. Clear enough to go? Clear enough to go? Yes. I'm going to give you certain examples, people. You're going to tell me if it is revenue or capital. Yes. Scenario number one, I'm working in a company. You're also working in an articleship firm. Yes. Imagine that you're working in an articleship firm and what has happened is your articleship firm, like you did some mess up. Yes, because of a mess up, the client ended up paying 1 crore ka demand. 1 crore ka demand. Your boss comes to you and comes and says, boss, keeping you is a liability for me. Might as well leave. Might as well leave. Now you went to your boss and came and said, sir, actually no, income tax chartered accountants act comes and says that after first year of articleship, I cannot be removed. I cannot be removed. If you have to remove me, you have to pay 1 month ka compensation. You have to pay 1 month ka compensation. He said, sir, I am okay to pay you that 1 month compensation than keeping you here. Get lost. And therefore you are paid 1 month ka compensation, that 5,000, 6,000 rupees which you get. That things which is helping you to buy your breakfast for morning. Yes, that 5,000 rupees which you are getting. Question, that 5,000 rupees which you get, capital or revenue? Because
this is my only source. I cannot.
it's a capital receipt because this is your only source of income and the only source of income is getting abolished. Only source of income is getting abolished. Correct, not correct? Yes. Option number two, you are in the business of selling TVs. You are in the business of selling TVs. You sell TVs for LG, Samsung, Xiaomi, whatever it is. Yes. Now what has happened is Xiaomi came to you one day and came and said, see boss, I'm not happy with you selling other TVs. I'm not happy with you selling other TVs. You become my exclusive dealer. You become my exclusive dealer. I will give you better job. I said, no, I don't trust you. Your TV is anyway not working properly. Yes. Therefore, I don't want to work exclusive with you. I want to do an independent sale. I want to do an independent sale. Xiaomi came and said, if you don't change your contract, I will rescind the contract. I will rescind the contract. I said, you get lost. I don't care. For me, my biggest sale is OnePlus and Samsung and all. Xiaomi and all, big deal. I don't care. Leave. Yes. But I came and told him that if you want to leave, you have to check my business contract. My business contract comes and says that any dealer who leaves this without giving me a prior notice of 3 months, and I have to suddenly get loss of my unsold stock, will have to pay me 1 crore ka compensation. Xiaomi said, no problem, I am ready to pay the 1 crore ka compensation. You get lost from here. I got the 1 crore rupees. Question, capital, revenue. Capital, revenue. Because it's a revenue receipt. Please understand, even though it is a one-time activity, this is a part of a normal course of dealings. Understand, this person is not dependent on Xiaomi. This person is running an agency for everyone. And if you understand this carefully, if he's running for everyone, he would have put this clause in every contract, which means it is possible that every person will come and go. And every time he will keep earning this money. Correct, not correct? Ask yourself a question. This money which is coming to you is coming because the source has been abolished, or is coming because it is an underlying incidental activity to the main contract? It's an incidental activity to the main contract, which means you didn't expect it to come, but if it comes, it's not a problem for you. Correct, not correct? Did you earn this money with an intention to earn it? Did you earn this money with an intention to earn it? No. You earned this money because it is incidental to the contract, and therefore it becomes a capital receipt. It becomes a it becomes a revenue receipt. It becomes a revenue receipt. Correct, not correct? Yes. Option number 3. Now I am an exclusive dealer of Samsung. I'm an exclusive dealer of Samsung, and Samsung comes and says, boss, you're not doing a good job. Therefore, I want you to shut down. I wanted to shut down. I said, sir, I was running based on you only. Tum hi mere mata, tum hi pita ho. Yes, everything is because of you only. Now, if you itself decide for me to shut down, then I will lose my livelihood, bread and butter will go. Therefore, you have to pay me compensation. You have to pay me compensation. Samsung said, okay, 1 crore compensation for you. Capital revenue. Capital revenue. Capital, because now it becomes your only source of income, and this is not a normal course of dealing. This is not a normal course of dealing. When you put this clause in the contract, you ensured to put it because you wanted to keep yourself safe, which means now you are expecting the compensation. Now you were expecting the compensation, and therefore it becomes capital receipt. It becomes a capital receipt. Correct, not correct? Correct, not correct? I come to you and I come and say, dear person, you are selling my Samsung TVs. Now, because you're selling so many TVs, I'm extremely happy with you. Super proud of you. Super proud of you. Let me do one thing. I'll give you a free Thailand ticket. I'll give you a free Thailand ticket. Go enjoy and come. Go enjoy and come. The Thailand ticket which you got in your hand is a gift to you, and therefore is a receipt. And therefore is a receipt. Question: capital receipt, revenue receipt. Capital revenue, because it is not incidental to the activities. There was no expectation on this. It was not mentioned in the contract that I will get it. It was just given out of gratitude, which means it was not to be taken up itself. It is a one-time activity, and therefore it becomes capital. Therefore it becomes capital. Correct, not correct? Correct. You are getting married. People are coming to your marriage and giving you that moi. Hindi mein lifafa. Yes, Tamil mein moi. Yes, they're coming and giving you that moi or lifafa. Yes, you're getting money inside it. You're getting money inside it. Capital revenue. No doubts about it. Yes, you're not getting regularly married just to get the money. I mean, if you are, then it's a different conversation. But yeah, I don't expect people to get regularly married just to get that money. Therefore, it is revenue. In simple words, if I have to come and clarify to you, Rahul, any gift which you get is always. That is what the idea is. That is what the idea is. Clear enough? Clear enough? Yes or no? Yes or no? Now I'm going to give you some case laws, people, the ones which are there for your study material. What I'll do is I'll give you a scenario, and you will come and tell me, Rahul, whether it is capital or revenue. Capital or revenue. I will place the case before you. You are my judge. You are my judge. Don't come and give me emotions. Give me law. Give me law. Don't give me emotions. Give me law. Clear? Yes. Case is like this. What has happened is there is a person called Mr. A. There is a person called Mr. A. This person came and said that I want to buy some assets. I want to buy some assets. And therefore he went to a dealer and he came and said, dear dealer, you have to sell me assets. You have to sell me assets, but I want a condition. I want a condition. My office is going to start 2 days later, which means my inauguration ceremony is 2 days later. My inauguration ceremony is 2 days later. Therefore, you have to promise me that you will give me the assets tomorrow itself. You have to promise me that you will have to give me the assets tomorrow itself. That guy came and said, sir, mother promise, I'll give it to you tomorrow. No problem. I said, I don't want your mother promise and all. I want the assets. I want the assets. So what I did is I went into a contract, and in the contract I came and said, it is hereby confirmed along with the supplier that the supplier will give me the assets tomorrow. Any delay from the supplier in supplying the assets beyond tomorrow will make him liable to pay me compensation. Will make him liable to pay me compensation of 50 lakh rupees. Of 50 lakh rupees. And I will now have the right to not to purchase the assets. I will now have the right to not purchase the assets. So what happened? A went to a supplier, came and said, you have to give me. Came and said, you have to give me assets. Came and said, you have to give me assets. If you don't give me the assets by tomorrow, I will rescind the contract but charge your compensation of 50 lakhs. Charge your compensation of 50 lakhs. Unfortunately, what happened? Tomorrow was the riot. Chennai is closed. Chennai is closed. Some nonsense is happening. Because of which assets did not get Delivered. I was not able to conduct my inauguration ceremony. I went to the supplier and came and said, dear supplier, your mother promise and all, went to mother. Yes, the asset is not needed. Give me my 50 lakhs. Free money for me, because I did not get asset also, I got 50 lakhs also. While in all honesty, ceremony lost. So whatever expenses you incurred on ceremony is your cost. Yes. Question: 50 lakhs came to your hand. Capital revenue. Judge you are. Throw an answer. Capital revenue. Because sorry, what if he was giving you inventory? No.
This compensation is because I'm not able to
Get my assets on time. Correct. This will be capital. What if it was given revenue inventory? What if you are asking him to give you raw materials and he did not supply raw materials on time, for which you asked a compensation? Quick. Capital revenue. Okay, let me conclude this one first. Answer is capital. If I give you the reason, you will find the answer for the second one also. Understand why did you get the compensation? Because this was relating to a capital asset, which means whatever money you got was directly linked to a capital asset. Now, if you understand your accounts properly, you have something called government grants, where the government grants come and say, if you receive grant in relation to an asset, you will reduce from the asset, which means it is capitalized. But you receive a grant in relation to a revenue item, it will be offered to P&L. Why will you offer it to P&L? Because it is revenue. If you are receiving an asset, or you are supposed to receive an asset, the money is coming in relation to the asset, it becomes capital. But if you are receiving an inventory, then it becomes, in simple words, Rahul, whatever compensation you got is incidental to the main activity. Which means if the main activity is capital, the incidental activity also becomes capital. But if the main activity is revenue, then the incidental activity also becomes revenue. Correct, not correct? Yes, this was decided in a decision called as CIT versus Saurashtra Cements. Supreme Court judgment. CIT versus Saurashtra Cements. Hey, just in case I did not clarify this earlier, when I see CIT versus Saurashtra Cements, can you tell me who's the appellant? CIT is the appellant. If CIT is the appellant, it means High Court had allowed it in Saurashtra favor or CIT favor? Saurashtra's favor. Yes, if CIT is the appellant, it obviously is because Saurashtra won the case in High Court also, which means Supreme Court has just confirmed the fact that High Court is correct. Correct or not? Yes, you'll find this in your page number 7 of your book. Just to see it, don't see the balance case laws, I have to discuss. Can we go forward? Yes, great. Second, case law number 2. What happened is, there were two foreign companies who have decided to come down to India and work in India. Decided to do what? Come down to India and work in India. So what happened is, these two companies, one is called H, one is called S. Yes, it's not holding subsidiary, different names. Yes, two companies decided together that they want to come down to India and work in India. Now they made a decision that, Rahul, when we come down to India and work to India, we are both different companies. So we cannot just like that come down to India and create a new company. Therefore, what they decided is they will come down to India and create a JV called as HS. They'll create a JV called as HS. Yes. So what happened is they came down to India and they came and said, we will create a JV in India by jointly holding it, one by H and one by S, one by H and one by S. Now, for doing this JV, they entered into an agreement. The agreement was called as TCA. The agreement was called as TCA, or in simple words, Technical Collaboration Agreement. Yes, we are technically collaborating with each other and forming a JV. Now, obviously, when you are entering into a technical collaboration agreement, what will happen? One person will hold all the technical knowledge. One person will hold all the technical knowledge. So therefore, he will go to the other person and come and say, what? I want money. I want money for whatever technical knowledge I am going to give. Yes or no? Yes or no? So what happened is this person ended up giving him something called as technical fee. He ended up giving something called as technical fee. So what happened in simple words, Rahul? There is two parties who have come together, created a JV by forming a technical collaboration agreement, and as per the technical collaboration agreement, one entity will give to another entity something called as technical fee. Something called as technical fee. One entity which got the technical fee decided to call it as a capital receipt and exempt it from tax. Whereas assessing officer came and said, no, whatever fees you got is a revenue receipt and therefore has to be offered to tax. Now you are the judge. You have to come and clarify to me that all the technical fees which has been given is a capital receipt and therefore exempt, or is a revenue receipt and therefore taxable? Knowledge. Understand this technical fees is only being given because you are creating a JV. Had this JV not been in existence, this technical fee will not be given. This technical fees is only going to be helping you for technical knowledge which is required for the JV. Keep that in mind. Quick. Revenue capital. Revenue, because she's talking to herself. No, understand this carefully. Payment is going to happen from this to that person. It is not going to happen to this person. It is from H to S. It is not to S, JV. It's not a transfer. Technically not a transfer, because I am still going to hold my technical knowledge. The person is going to use my knowledge, so it's a right to use. Think. No idea. Take a swing. Because okay, they are going to use the technical fee to make the technical knowledge illa. Which one? JV. Okay.
So the fee that basically it's like a made available.
It's not made available. Okay.
So they could use it to
That's technically revenue then. So if I have an IP license and you're going to pay me royalty, you're going to call it capital or revenue? Because you're going to use it, right? I'm not going to sell it to you. You're giving me the same example only.
being self-directed capital expenditure for the change. Technically, very one thing is one thing here.
I think it is one time. Yes.
Using that knowledge and see that move on to the next. So it will be
Very good. Answer is capital. Answer is capital. Understand, I kept on stressing the same point to you again and again. The whole reason why this technical fees is being paid is because there is a JV, which means tomorrow if you decide to not pay the technical fee, the technical collaboration agreement will cease to exist. and the collaboration agreement ceases to exist, that JV itself will cease to exist. Brings me to the same point. I came and told you if this is the only source, then the number becomes capital. Then the number becomes capital. Yes or no? Yes. The court here came and clarified that, boss, if the money was given as a regular operations money, the money was given as a regular operations like royalty, then it is okay. Then it is okay, because then you are only giving money for every time you use it. For every time you use it. But here it is not the case. You are not giving money every time you use it. You are giving money to keep that in existence. The moment you stop giving the money, the existence is demolished. And if the existence is demolished, the company itself will shut down. Can you let that happen? Can you let that happen? No. If you cannot let that happen, whatever money is being received is called capital receipt. It's called as capital receipt. This was a case law called as Honda CL, thereby HNS. It's called Honda CL Cars India Limited versus CIT. Again, a Supreme Court judgment. Now here is where the comedy is. Here High Court came and said it is revenue, but Supreme Court came and said it is capital. It was an overriding case law. They won it in their favor. Yes or no? Yes. The idea is to understand, Rahul, when you get the money, is the money going to impact your business significantly? If yes, then it is capital. If yes, then it is capital. If it is going to be a regular payment which is not going to impact your business existence itself, then it is revenue. Clear enough to go? Which then begs to the question, Rahul, royalty also is something like that only, no? Why do I give you royalty? Because I'm going to use your brand name. So tomorrow if I stop paying royalty, I cannot use your brand name, which means my company will cease to exist. Whatever royalty payments you make should be called as capital. Correct? No. Why do you claim it as revenue?
I cannot use the brands. Still continue my business.
Very good. Understand, when you enter into a royalty agreement, no royalty agreement comes and says that I'm paying this money to keep my business alive. The royalty agreement only comes and says that I'm paying this money for me to use your trademark. Which means tomorrow if your name is not there, I will still continue. Just that the name is not usable anymore. Which means my business does not stop existence. People, the reason I'm telling you this is because there are multiple places where assessing officers are useless. I've seen it in my clients itself. Where what happens is every time my clients end up paying royalty money, officer will come and say this is the capital expenditure, therefore you have to capitalize and claim depreciation. And I always come and ask the same question, sir, how the hell can you make a capital expenditure every year? You can make it only once, you cannot make it every year. If you want to capitalize it every year, then you do one thing. You do a, what do you call it on the FM, what do you call it? Present value. You present value all my future cash flows and then you claim it as an asset today, which means I will come and clarify that I paid the asset in installments. I make the payment in installments. Now what will happen? Obviously, if I do that, what will happen? Officer will suddenly, instead of me paying 1 crore every year, he will now give me depreciation on 100 crores. He will lose more money there because he has to give intangible at 25%. Correct, not correct? When I went and I made that proposal to officer, he was like, no, pa, you claim 1 crore parvala. Idhukku na extra kudukradhukku na 1 crore kudukran parvala. Yes or no? These are ways to avoid officers, people. Yes, you have to just play differently. The moment you start asking him tricky questions, he will start getting worried about. Yes, so there is always a right answer to answer things. Clear enough? Yes, great. Brings me to case law number 3. Now this is the latest case law which has been notified in 2024 November. It is going to come for your November 24 exams, not so much for yours, but nevertheless. The case law looks like this. What happened is there is a person called A. He had actually done what? He had taken a place on rent. Now obviously if you know a rental contract, what happens? Every time you take a place on rent, you have to give a pre-deposit. So what happened is this person ended up giving something called as a security deposit. Yes. Now what happened? He was working in this office space for about 5-10 years. 10 years later, what happened is he came and said, I don't want to use your space anymore. I want to go to a better place. But the problem, what happened is the other person came and said, no, sir, actually, I am okay with you going to another place, but you have damaged my property significantly. And therefore, you have to pay me compensation. He said, I have not damaged and everything. And therefore, they went into a fight. Because of the fight, what happened is this person stopped the payment. Which person? A stopped payment and the dispute kept on going on. At a certain point of time, A got fed up. And he's like, you know what? Get lost from here. I don't want to sit here anymore. I don't want to sit here anymore. If you have a problem, you keep my security deposit. You keep my security deposit. So what happened? This A went to B and came and said, I am leaving your premises because there is a dispute going on. I don't want your security deposit. I don't want my security deposit back. You keep it. You keep it. I don't want it. I don't want it. So B kept the security deposit. B kept the security deposit. Now the problem what happened is A had used this place for office premises, and therefore the deposit was made for an office space. A went inside PGBP, put up a loss, came and said loss on foregoing what? Security deposit. Loss on foregoing security deposit, let's say 5 lakh rupees. He claimed it as a deduction. Assessing officer came and said, boss, why did you claim this as a deduction? This is a capital expenditure. And therefore no deduction will be allowed on this. Assessee went and said, okay sir, if you're not giving me deduction, you are calling it capital expenditure, give me depreciation. He said, I cannot give you depreciation also because there is no asset which has come into existence. There is no future benefits. And therefore he said permanent disallowance. Now assessee is already losing money. Therefore he comes to you as a judge and requests that this money should be claimed as revenue. You are the judge. You need to decide whether it's revenue or capital. Quick. It's not adjusted. It's foregoed because there is a dispute. That is different. He just said that there is a dispute going on, so I don't want my deposit. It's not adjusted against rent and all. Back. Forego it. It's not a non-refundable security deposit. If it was non-refundable, then it is a revenue expense only. This is a refundable security deposit, but he chose to forego it. If you think this much in exam, no marks for you. Huh? Why?
Voluntary will not decide revenue or capital.
Technically not.
It's not like, okay, from the B's point of view.
From B point of view, it is capital receipt. He is definitely not going to offer to tax.
It's a definition for you making an asset or
No. There is no such definition. There is generally also not such definition. There is no such definition which comes and says capital expenditure should bring an asset into existence. How is it a capital expense if it's going to reduce liability? That is asset, ra. Think. This is.
because I can say this was there is no dispute in relation to my business which I was carrying on. The rental premises.
It's a dispute not in relation to business. It's a dispute in relation to the office space.
This is used for
You're right.
that's all. There's some dispute in relation to a business for settlement. And it's not for settlement.
It's for settling the dispute.
He paid to settle the dispute.
He didn't pay to settle the. He forego it to settle the dispute.
Somehow linked to my business. Later,
See, if you ask me that way, if you purchase an asset also, it's linked to business only. I don't think that's revenue.
be the revenue also. It can be
Honestly speaking, it should be revenue, but this was a weird case law which got passed last year and it came and clarified that it's a capital expenditure. The Supreme Court in the case of Mahela Anand Filter Systems Private Limited has come and clarified that understand the essence of the security deposit was a capital item. When it was shown in a balance sheet, it was shown as a capital item. You chose to forego a balance sheet item. It does not change the characteristic of the asset and therefore it continues to be a capital expense. It continues to be a capital expense. Honestly, if you come and ask me, it doesn't make sense.
Sir, but even there was one other Supreme Court, since 19.
Yeah. Honestly, it doesn't make sense because, like you rightly said, if you come and ask me, when I forego the security deposit, I would not come and say that I forego a deposit. I would come and say that the deposit was adjusted against my rent payments. And the moment I say it is adjusted against my rent payments, it becomes a revenue expense. It becomes a revenue expense. The problem what happened is the advocate or the judge, the advocate which was representing the case was a stupid guy, nothing else. Yes, he did not make sure, he was not able to win the case for the person. Yes, this is a very clear-cut case which could have been won. There was no doubts about it. You just simply had to not come and say that it was a deposit which was foregone. You had to simply come and say it was deposit which is adjusted. The moment you said it is a deposit which is adjusted, you would have won the case. Yes, the facts of the case have changed. The facts of the case have changed. In simple words, Rahul, if I have to establish a ground rule for you from a practical standpoint, I would come and say that if the deposit is foregone, without any reasons, then it is capital. But if the deposit is adjusted against my future rent payments, then it is revenue. If it is a non-refundable deposit, also it is revenue, because technically non-refundable deposits are nothing but rent payments. Yes, this is what the ground rule establishment will be. Somehow a weird case law. Are you clear? He may have settled it separately is what I understand. They did not clarify that in the case law. Case law basically came and said security deposit foregone by the person in relation to a dispute will be treated as a capital expenditure, full stop. And no asset depreciation will be claimed because there is no future benefits coming to it. Clear? Yes. Can you write down some notes for this alone? You have your sticky notes, people? That's it. Push பண்ண முன்னாடி. Yes, you can stick it on page number 7, people. In page number 7, what is the rules? Deposit foregone for a dispute will be called as capital. Deposit foregone for a dispute will be called as capital. Second, deposit adjusted against disputed rent payments will also be called as revenue. 3, refundable deposits. Refundable deposits, capital revenue. Capital. Hey, I am discussing whether it's a receipt or not. I am not discussing whether it is income or not. Point number 4. Non-refundable deposit. This becomes revenue. Clear? For those who are confused about point number 3, please note the fact that I am discussing whether it's a receipt or not. I am not discussing whether it is income or not. We are not clarifying whether it's taxable or not taxable. We are only trying to clarify whether it is receipt or not, because there is one golden rule which we have already learnt. All incomes are receipts, but not all receipts are. Keep that in mind. It's a capital receipt. The money which is refunded back to you is a capital receipt சொல்றேன். நான் 1 லட்சம் கொடுத்தேன், திருப்பி அந்த 1 லட்சம் வாங்கிட்டேன். It's a capital receipt for me. It's money given back to me. That's it.
What is it was, for example, the JD, constructor or the developer who's paying compensation basically
For
the owners, landowners or the building owners. Let's say we give the rent amount plus compensation. They're taking it as a compensation.
ஆமா,
And they're saying not to settle the tax.
correct.
Still they're paying rent for using the property.
See, it's not technically a rent if you understand, Pranav. Basically, rent is a term for you to come and clarify that for the 2 months or 3 years which you're going to create the building. For that period, he is coming and saying, I'm giving you rent. It's technically not a rent. See, when you entered into the JD itself, it technically came and told that you sold the property. If you understand capital gains properly, the capital gains provision comes and says that when you enter into a JD, the day on which the property is given for construction is the day on which the asset is transferred. Which means after that day, whatever payments are happening are technically payment made for consideration of the land, right? You may call it rent. It does not change the essence of the contract.
So what if let's say the owners get a part of the development property?
They will know. That's what the whole promise is. It's basically where I'm coming and saying that I have 10 acres of land. I will give you 10 acres of land. In exchange, you'll give me 5 acres of land. So you have now given me 5 acres of land plus some rent amount plus some extra money. Now technically that whole 5 acres plus the amount which you have given is for my sale of property. So therefore it is a capital receipt. That's how it is. Because the asset was technically transferred on the date on which you sold the whole 10 acres itself. Yes, now in all practical sense you never sold the 10 acres. Right? Because you technically had the 10 acres even later on also. Just that it got split into 5 acres and 5 acres. But at the end of the day, from capital gain perspective, it is clarified that it is a sale of property on the date of transfer itself. Good to go? Yes? Sweet. Any doubts still here, people? No? This is how your classification of capital receipts and revenue receipts take place in order to understand whether it is taxable or not taxable. Good to go? Good to go? Yes. That leads me with the last topic for today's, for this chapter. We are looking at some examples. Again, a few case laws, not there in your syllabus, but technically just to understand some. Yes. Imagine a case where what is happening is there is a person called Bill Gates. Yes. Because we have to make it India, I am going to call him Billu Gates. Yes, so there is an Indian guy called Billu Gates. There is an Indian guy called Billu Gates who's right now living in India. And is getting salary. Is getting salary. So what happened is he's getting salary from another company called Manjusoft. So he's getting salary from another company called Manjusoft. Now what happened is this Billu Gates came and told Manjusoft that I have to give salary. I have to get salary. But I am very inspired by Mr. Bill Gates. And therefore I am not interested to get the money. Please do one thing. Instead of you giving me this money, you donate this to an foundation. You what? You donate this to a foundation. So they are simply coming and saying that Billu Gates was to receive salary from Manjusoft, decided to not get salary, but rather decided that he will directly give the money to foundation. Who will give? Manjusoft. Manjusoft will give the salary. Manjusoft will give the money to foundation. Now assessing officer has come to Mr. Billu Gates. Assessing officer has come to Mr. Billu Gates and come and told, boss, whatever salary was there, you have to pay tax. Billu Gates comes and says, sir, why the hell should I pay tax? I did not even have money. I do not get money itself. Where will I get tax from? I don't have money to pay tax. Question: is Billu Gates correct or is assessing officer correct? Is Billu Gates correct or assessing officer is correct? Taxable, not taxable? It is taxable. This is your concept of hidden. That's the point. This is called as application of income. I'll come to it. This is called as application of income. Please understand this whole model, people. What exactly happened? Billu Gates came and said that I will receive the money, but I don't want to receive the money, you give it to him. Who made the choice? Bill Gates made the choice. There were two ways to do it. Either Bill Gates could have got the money and then given a donation, or he could have directly given. Indirectly, he's done the same thing only. Yes or no? Authority to make the donation diversion is with Bill Gates, which is nothing but an application of income, and therefore it is taxable in the hands of Bill Gates. He is eligible to claim 80G. He is eligible to claim 80G, but that does not change the fact that he can only claim up to 10% of adjusted total income with 50% donations. Yes, so he will still have to pay tax. He will still have to pay tax. Understand the difference between something called as application of income. Application of income is a model where I'm coming and saying, I have the authority to decide what to do with my money. I have the authority to decide what we do with my money. If I have the authority to decide what I have to do with my money, I also have the authority to revoke it later, which means I am now simply trying to root my money somewhere else, and that is called as application of income. Continues to be taxable in the hands of Bill Gates. Continues to be taxable in the hands of Bill Gates. I'll give you option number 2. I'll give you option number 2. Take an example where what is happening is there is a father. There is a father. This father holds 10 acres of land. This father holds 10 acres of land. Now the father has created a will. The father has created a will. The will comes and says that if I die, this property will have to be sold. This property will have to be sold, and whatever property is sold, 10% of the money has to go to my wife. When the property is sold, 10% of the property money has to go to my wife. The balance 90% can be split between the sons based on their agreed ratio. One day father died. The eldest son A, went and sold the property. Received 10 crores for it. Now this 10 crores, son A comes and says, I received the 10 crores. Therefore this full 10 crores is my taxable hand. I want to keep the whole 10 crores in my hand, and therefore I want to tax it completely in my hand. Question: allowed, not allowed? Allowed, not allowed? Allowed, not allowed? Can the assessing officer go to son A and come and tell son A, dear son A, pay full 10 crores ka tax? Can assessing officer come and ask son A to pay full 10 crores ka tax? Can assessing officer come and say no? In this case, assessing officer can only make son A taxable for 9 crores. Understand, agreement does not clarify who will get how much. They say balance 90%, anyone can have. Therefore, son A decided to keep the balance 90%. In this case, the assessing officer can only tax son A for 9 crores. The balance 1 crores will be taxable in the hands of his mother, son A's mother. This is called as diversion of income by overriding title. This is called as diversion of income by overriding title. Ask yourself a simple question. The moment son A was selling the asset, did he ever have the right on the 10% of the profits? Could he make a decision on the 10%? No, he never had a title on that property. Yes or no? Because it was not decided by him itself. It was already decided in the will itself. When it was already decided in the will, he never had a right on that property, which means he could not have earned the income itself. And if he could not have earned the income, he was only acting as an agent to collect the money. Because he never got a title on that money itself. Yes or no? Think the Billu's case. He had the title over the property. He had the title over that 1 lakh. He decided to divert the title. Yes or no? Which means he decided to keep the title and then move it out. But in this case, A did not even have the title to start with. And I do not even have the title to start with. I cannot offer it in my hands. It has to be offered in the hands of wife, because she is the right owner of the title. The only way you understand whether it's application or diversion is by asking yourself, can I make the decision? If I can make the decision, it is application and therefore taxable in my hands. If I cannot make the decision, it is diversion and it is not taxable in my hands. It is not taxable in my hands. Clear, not clear? Clear, not clear? Case number 3. I will give you case number 3. You tell me what is the answer. Yes, there is a HUF. There is a HUF. Yes, now this HUF is run by a Karta. This HUF is run by a Karta, and the Karta comes and says that if this HUF is tomorrow demolished, if the family decides to split, the assets of the house will be split to every member of the family. Will be split to every member of the family. So what happened in the HUF? There was A, there was B, there was C, there was D. A, B, C and D. 4 members in the family. HUF is decided to shut down. HUF is decided to shut down. There are 10 crores worth of property to be split between A, B, C and D. A, B, C and D. Now, what happened is there was a round table conference going on. In the round table conference, A, B and C decided, you know what, D is very poor. D is very poor. We have our own businesses. Therefore, we can run a life. D is not having any business. Therefore, we will let D have all the property. Let D hold the whole of the property. Let D hold whole of the property. Question: 10 crores to be split between 4 members, but 3 members of the 4 are coming and saying, I don't want the property. Let it go with D itself. Let it go with D itself. Question: 10 crores taxable in the hands of
that A, B, C has to be split among all.
in the agreement it says 10 crores will be split amongst all the 4 people.
And then it will be taxed on them. They will say what ratio of them.
Obviously.
Same case to the shadow. No sense.
There I said 90% will be agreed amongst. They are saying it is to be given to all 4 people. Taxable in the hands of D also will get something, no? Achha. Taxable in the hands of A, B, C and D, because you see this is a combination of diversion plus application. This is a combination of diversion plus application. In the agreement it is diverted to A, B, C and D, and then A, B and C are deciding to apply it to D. Apply it to D, therefore it becomes taxable in the hands of A also, B also, C also,
There is no ratio of
D also. Whoever gets the money, whoever gets how much money.
No, in this case, there is no ratio. Everyone decides to give it a
Then it will go to D only, because there is no ratio decided. It's the same case as above then. There I'll come and say son A will get everything. Yes, if there is no ratio given, then it's a different conversation. But normally a ratio will be not, if the ratio is not given, it is assumed to be equal. That is also there. Yes, because obviously which of the son will come and say I don't want the money. Yes, even if he is rich, he will still want to become richer only. Yes, no person in the right mind will come and say give it off, unless and until there is an hidden agenda. Yes, point is this is a combination of diversion plus application. Diversion to the extent of the agreement, but application to the extent of the members. And therefore it becomes taxable in the respective parties to the extent of diversion. It will still be taxable in the hands of A, B, C and will be enjoyed by D. Now in all practical sense, if I have to clarify this, nothing of this is taxable. Because capital gains regards this not as transfer. But I am not in the conversation of taxability. I am in the conversation of diversion. Yes, whether it's an income or not, yes. So the taxable or not is a different conversation. Yes, I am right now trying to understand who will get what income. Clear to go? Any confusions, people? Clear enough? Sweet? Great. I'm going to show you a few questions from a study material. Let's see if you're able to answer the same questions from that extent itself. Look at the question. It says, Mr. Bhargava is a leading advocate on corporate laws, has decided to reduce his practice to accept briefs only for paying his taxes and making charities with the fees received on such briefs. So he's coming and saying, I'm deciding to stop my practice and I will receive only certain money. Enough for me to pay my taxes. In a particular case, he had agreed to appear to defend one company in the Supreme Court on the condition that he would be provided with 5 lakh rupees for a public charitable trust that he would create. So he's coming and saying, I will go and represent a case and I will receive 5 lakhs for that. But that 5 lakhs should not come to me. It should go to the trust. He created a trust of that sum by executing a trust deed. Decide whether the amount received by Bhargava is accessible in his hands as income from profession. Tell me, is it taxable in the hands of Bhargava or in the hands of profession? In the hands of trust? Taxable in the hands of, because
Application.
Very good. Decision to repatriate is done with Bhargava. He made the decision to repatriate and therefore it is as good as an application of income. Just because you create an agreement does not change the essence, because you were always having the title. You were always having the title. Tomorrow before the money comes, you can always rescind the title also. Therefore, it will still be in your hands and therefore it is an application of income. It is an application of income. Clear to go? Clear to go? Yes. Now, Rahul, if a question like this comes, how do you write it in an exam? You write application of income, full marks. I know the format. I want an answer. You're final students, people. You're not interest students. Give me the answer, 4 marks. Give me the answer, 4 marks. Give me the answer, people, 4 marks. How do you write? Understand, obviously in your books I'm not going to ask you to write theory and also you need to answer it along with me so that you understand it for exam purposes. How do you think is the best way to present this? You would have written opinions, no? Made lakhs and everything out of it. What is the format of opinion? That is okay. Next, you always start with provisions, then you start with facts, then you give analysis and conclude it with the facts, conclude it with the conclusion. Yes, start with the provision. What do you come and say? You have to write application of income, that's all. Yes, in cases of an application of income, the income will be taxable in the hands of the transferor. You are telling the provision first, no? Telling the provision first. So in the provision you are coming and saying, in case of application of income, the income will be taxable in the hands of the transferor. Will be taxable in the hands of transferor. In the present case, Mr. Bhargava has created an executive deed for transferring his share of profit to a public charitable trust. The decision was made by Bhargava and he has the authority to also rescind such decision, and therefore this is an application of income. In light of the above, the income will be taxable in the hands of, correct? No. Question number 2. It says XYZ Limited took over the running business of a sole proprietor by a sale deed. So they decided to buy a individual firm. They decided to buy an individual proprietorship. As per the sale deed, XYZ Limited undertook to pay overriding charges of 15,000 per annum to the wife of the sole proprietor in addition to the sale condition. So they're coming and saying that if I want to buy the property, I will also have to pay 15,000 extra to wife. The sale deed also specifically mentioned that the amount was charged on the net profits of XYZ Limited, who has accepted the obligation as a condition on the purchase of the going concern. Which means they're coming and saying, Rahul, every year I'll have to pay 15,000 rupees to the wife from my profits. From my profits. Is the payment of overriding charges to the wife of sole proprietor in the hands, in the nature of diversion of income or application of income? So the question now they're coming and saying is, Rahul, every year, let's assume this year XYZ Limited make 1 lakh rupees. XYZ Limited made 1 lakh rupees. Question, 1 lakh rupees fully taxable in the hands of XYZ Limited. True or false? Is 1 lakh rupees fully taxable in the hands of XYZ Limited? The fact is coming and saying that, Rahul, there is a firm, there is a company deciding to take over a proprietorship firm. When they took over the proprietorship firm itself, the firm, the proprietorship came and clarified that if you want to take over my proprietorship, you will have to promise me that every year when you make profits, 15,000 of the profits has to be given to my wife. 15,000 of the profits has to be given to my wife. The balance is your profits. The balance is your profits. It's not appropriation. Wife is not a part of your company. That is what the question is. That is what the question is. The question is XYZ Limited liable to offer 1 lakh rupees to tax, or they are liable to offer only 85,000 to tax? Because how is it an expense? Correct, but it is only coming out of your profits, right? So it's technically application only, right? It's coming out of my profits. I'm going to give my profits to her.
Choose not to give.
Because, very good. Understand, when the agreement was settled, sole proprietorship made a condition that if you want to take over my business, you have to promise a 15,000 ka sum, which means the decision was made by proprietorship. It was not made by company, which means to the extent of that 15,000, company never had a better title, which means it was already decided that when the proprietorship is being run, the wife is also a part of the firm, which means it's technically a hidden partnership. Where the hidden partnership comes and says whatever profits is made by the proprietorship, wife will get 15,000, balance will come to company, yes or no? Yes, which means this is a case of diversion of income by overriding title. Understand, like I said, the answer to question is always in the reason to understand whether I can make the decision or I cannot make the decision. If I can make the decision, it is application. If I cannot make the decision, it is diversions. Clear? Look at it. It says the facts of the case are similar to the decision of Allahabad High Court in the case of Jit and Pal X-Rays Limited versus CIT. Read. How does it read? How to read this? How to read this, people? It was heard in 2004, volume number 267, income tax, reference page number 370, passed by Allahabad High Court. The High Court observed that the overriding charge which has been created on the favor of the wife of the sole proprietorship was an integral part of the sale deed, by which the going concern was transferred to the assessee. The obligation therefore was attached to the very source of the income, meaning Vangamode, I made it very clear that it is not coming to me. That is, the going concern was transferred to the deed, meaning if I don't give the 15,000 tomorrow, the sale itself will become voidable. And therefore it is very foundation that you have to make sure that you have to give the money. The sale deed also specifically mentioned that the amount in question was to be charged on the net profit of the assessee, and the assessee company has accepted such obligation as a condition of the sale. Hence, it is clearly a case of diversion of income by overriding title and therefore will not be taxable in the hands of company. Question number 3, people. It says MKG Agency is a partnership firm consisting of Mr. Mohan and 3 major sons. So there are 4 partners. The partnership deed provided that after the death of Mr. Mohan, the business will be continued by the sons, meaning the business will be run by 3 partners, subject to the condition that the firm will pay 20% of the profits to the mother, which is Lakshmi. Mr. Mohan died in March 2024. In previous year 24-25, the reconstituted firm paid 1 lakh rupees, which is equivalent to 20% of the profits to Lakshmi, and claimed the same as a deduction from the income. Examine the correctness of the firm. Can the firm claim the 1 lakh rupees as a deduction? Yes, because very good. It clearly mentions in the partnership deed that the partners do not have rights over the 20% of the profits, and therefore this is a case of diversion of income by overriding title. Therefore, the partners will be liable for taxation only to the extent of 80%, and the Lakshmi will be taxable to the extent of. Now you are getting the background. Yes or no? Great. I think these are all the questions I have. Yeah, these are all the questions I have. Great. This marks the end of your chapter number 1. By us understanding what is the meaning of income. The only thing which is left is to understand what is the total income, which I fairly think you people know. Total income is nothing but total of all 5 heads minus chapter 6 reductions minus 10 double deductions plus clubbing of income minus set off of losses. This will arrive at your total income. What are the 5 heads, people? You have salaries, you have HP, you have PGBP, you have capital gains, and you have IFOS. As a part of final level syllabus, you only have PGBP, capital gains, and IFOS. You are not having in your syllabus salaries and HP, except for a small set of provisions, which I will give to you. Clear to go? Great. This is what your provisions on chapter number 1 looks like. Now we have satisfactorily completed what is called as the basics of income tax. You fairly now I guess, know what is income tax. Yes, from here is what we're going to start into technicals, and we're going to start chapters. But before we do that, I always have a policy to give something called as golden rules of taxation. Yes, so let's note down some golden rules. You will note down the same golden rules you gave in inter 15 plus another 10 more for finals. So we are going to write down golden rules of taxation. If last page of your concept guide, people. The last page of your concept guide, you have a white space. Start from the left because you need both the pages. Start from the left, you will need both the pages. Irka ungita inga I'll give. Yes, put the heading as golden rules of taxation. Put the heading as golden rules of taxation. People, this is not technically like the golden rules. It's more like a step format. Where I'm going to clarify that if you are asked a question in a practical life or in an exam perspective, how do you approach a question? Yes, so where do you start and where do you end is the whole format. The moment we complete all the steps, we'll technically be completing all our syllabus itself. That is what the whole format is. Clear to go? Yes. Step number one. It's called as identify the question and its requirements. One of the most basic step and yet the important one, because this is the one place where everyone go wrong. Yes. You choose not to read the question, you choose not to understand the requirement, and then you choose doing everything else, and then you come and start blaming Rahul did not teach you properly, ICI is not giving you marks. Yes. So always first identify the question and its requirements. Step number 2, people. Identify the person and its residential status. Identify the person and his residential status. Step number 3. Determine whether the income is taxable or not. Step number 3. Determine whether the income is taxable or not. Step number 4. Classify the income into the respective heads. Step number 4. Classify the income into the respective heads. Step number 5. Provide deductions / exemptions. Provide deductions / exemptions under the respective head. Provide deductions / exemptions under the respective head. Step number 6. Step number 6. Club someone else's income. Step number 6. Club someone else's income. Step number 7. People. Set off of losses and unabsorbed depreciation. You set off before GTI. Step number 7. Set off of losses and unabsorbed depreciations. Full stop. This is called as GTI. The one thing which you always need to keep in mind, people, is that you can never give chapter 6 deductions before claiming your losses. It is always losses first, then deductions, because income tax is very clear that you have to first set off your prior losses, then only you can claim any extra deductions. If you are paying deductions more than what you can claim, it is a loss for you. So step number 7, now this is, now we wrote 7. This is called gross total income. Step number 8. Claim chapter 6A, claim chapter 6A and 10AA deductions. Claim chapter 6A and 10AA deductions, full stop. This is called as total income. This is called as total income. Step number 9. Compute tax as per normal tax regime. That is only for individuals, no? You are writing company people, you are final people. Compute tax as per normal tax regime. Step number 10. Compute tax under MAT or AMT. Step number 10 is compute tax under MAT or AMT. Compute tax under MAT or AMT. Step number 11. Compute tax under special tax regime. Compute tax under special tax regime. Compute tax under special tax regime. Done. Next, step number 12. What is it? Nope. It is 9 versus 10, whichever is higher, versus 11, whichever is lower. Special regime is not having MAT and AMT itself. So you will compare MAT and AMT with normal. Whichever is higher will be compared with special, whichever is lower. If you go for special, you cannot use, there is no MAT and AMT itself. Yes, it is step number 12. Step number 12 is people 9 versus 10, whichever is higher, versus 11, whichever is lower. Please understand, people, when it comes to your special tax regime, there is no MAT or AMT. So what you'll do, you'll take your normal, compare with the MAT or AMT, whichever is higher, because that is what the provisions are. That will be compared with your special to check whichever is lower tax for the year, and that is what you will pay. Correct. Full stop. Continue. This is called as gross tax payable. This is called as gross tax payable. Step number 13. What will you do? Obviously, adile irukku. When you say compute tax, you include surcharge and cess also. Claim TDS, TCS, advance tax, self assessment tax, what else? FTC, MAT, AMT, that's all. Final level syllabus. You have 89A, relief under 89A for salaries, and then you have relief under 86 for AOPs and BOIs. You have written what you have written: MAT, AMT, then relief under 89A and 86. 89A technically is not a part of your syllabus because it was part of salaries chapter, but yeah, it's there. So yes, so you'll not be learning 89A along with me, but you'll be learning 86. Done. Next, step number 14. Pay taxes. Add interest under section 234A 234B, 234C, 234 DLIL, F, and one more. 234E is for tedious. One more. No, 140B, updated return taxes. You will have to pay additional taxes in updated return. So 140B. 140B. Done. This will arrive at your final tax payable. This will arrive at your final tax payable. This will arrive at your final tax payable. Step number 15. So this will arrive at your final tax payable / refundable. Final tax, technically you should not have a tax payable at this point of time. You should only have a refundable at this point of time because you've already paid your taxes. Therefore you will arrive at refundable. Step number 15. File. Say file tax audit report. File tax audit report. You will first prepare computation, then only you will prepare tax audit report. How do you prepare tax audit without knowing the computation? You should know what to disallow and what to allow, no? Dude, you are a useless office. You will always prepare a draft computation based on which the tax audit is filed. It's always preferable to do a computation because then what may happen, you may do a tax audit and then later on during computation you may realize there is something missed out. And if that happens, then your return will get a mess because intimation will come saying it is not matching with the tax audit report. So it's always preferable to prepare a computation, at least on a draft level. Then use that computation to prepare a tax audit report and then go for ITR. I know for all those people who have come from a Big Four kind of culture or are working in a Big Four quasi culture, will always expect that the tax audit will be prepared by audit team and then you will get a computation where you will prepare your computation. That's not how it's supposed to be done. You're always supposed to prepare a computation which should go to the audit team for preparing a tax audit report and then it should come back to you for finalization of return. If it is happening the other way around, you can expect tax audit report is wrong only. Then you will have to make changes only there. I'll give you simple examples, people. Simple examples would be cases where what happens is during tax audit season, you realize that 43B was done by audit team and somehow they made a mistake. They forgot to take in consideration. When you looked into the computation, you realized that 43B is not matching. So what you did, you claimed more. Now in your return, you will claim more, but tax audit will show lower. Automatically what will happen? You will get a 143(1) intimation coming and saying tax audit comes and says it is not right and therefore demand will come up. It is always preferable to prepare a computation, circulate it to the audit team, tell them this is what the finalized computation is. Based on this, you prepare your tax audit report and then come back to me to prepare a finalized return. That is the best way to do it. But if you are working in a different kind of culture, that is your loss. Yes, because in all practical sense, it so happens that you are blaming your own audit firm. Yes, 99% of the cases, the tax audit will be done by your firm only. Computation will also be done by your firm only. And then what you'll do, you'll prepare the computation, send it to the client. And he'll come and say, Amma sir, yedo tappa poiduchu tax audit report la. He'll come and say, dey, unnoda company dana panna. At that time, you cannot come and say, no, sir, I am tax team, he is audit team. It's because then he'll come and say, you're all worst team only, nothing else. So never preferred that. Yes, so it's always file tax audit report, comma, TP report, file tax audit report, comma, TP report. Next, step number 16, file return of income and people, master file return of income and master file. If it is applicable, you will file. If it is not, it's not. File return of income and master file along with the return of income. Your CBCR and everything happens a month before. Your master file happens along with the returns. CBCR reporting, CBCR notification is done 1 month before. If you're filing actual CBCR, that is done along with master file. Yes, yes, so you will file your return of income and master file, full stop, continue, revise if necessary. Revise if necessary. Revise if necessary. Step number 17. Step number 17, update return for any missouts. Step number 17, update return for any missouts. Now this is what you technically did till your inter. From here you start your finals. Tell me people, what happens after return filing stage? Step number 17? Achha, 17 got over. 18. Step number 18. Assessee receives intimation under section 143(1). Assessee receives intimation under section 143(1). Under section 143(1). Full stop, continue. Make corrections if required. See, whenever you get an intimation, they will ask you two questions. Either the demand is correct, pay it off, or the demand is incorrect, you have to file a revised return. You have to file a revised return. Now, this will not be the revised return. It will be a revision to the 143(1). Basically, it's a correction return. It's a correction return. Yes. Yes, so you're filing a 143(1) ka corrections. You're filing a 143(1) ka corrections. Done? Done. Step number 19. What will you do? What happens? Assessee receives notice under section 143(2). Assessee receives notice under section 143 subsection 2 people. Yes, the earlier one was 143 subsection 1. So as 143 subsection 1, this one is 143 subsection 2, or notice under 148 capital A. For those who have never seen it practically, this is how the section looks like. It is called 143 subsection 2 or 148 capital A. 148 capital A. Yes, full stop, continue. Full stop, continue. Assessee subsequently receives notice under 148 for reassessment. Assessee subsequently receives notice under 148 for reassessment. And files a new return. And files a new return. Yes, this is called return on reassessment basically. It's called a return on reassessment. Done. 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 Next. Step number 20. What will happen?
They'll complete assessment.
Assessment proceedings are undertaken. Assessment proceedings are undertaken. Assessment proceedings are undertaken. Full stop. Reference to valuation officer if necessary. Reference to valuation officer, comma, special audit if necessary. Reference to valuation officer or special audit if necessary. Or special audit if necessary. 5 more minutes, people will complete this. Yes. Reference to valuation officer or special audit if necessary. Next. Next. Huh? What is next? I know this. What happens? Assessment is done. Next. Assessment order is passed under section.
TPO reference also.
Part of the same. Part of the same. Assessment order is passed under section 143 subsection 3 or section 147. Assessment order is passed under section 143(3) or 147. Full stop, continue. Full stop, continue. File rectification. File rectification under section 154. file rectification under section 154 for any mistakes apparent from record. For any mistakes apparent from record. For any mistakes apparent from record. Step number 22. What to do? File appeal before CIT bracket A. File appeal before CIT within bracket A or DRP or DRP. Next, 23. File before ITAT. File appeal before ITAT. Who can all file, people? Who can file? Can only assessee file or department can also file? File appeal before ITAT by assessee or department. The point I'm trying to make is, people, CIT and DRP ku vandittu department cannot file an appeal. Yes, for CIT and DRP, department cannot file an appeal except for a cross objections. That is an exceptional rule. Other than that, department cannot file an appeal to CIT or DRP. You can only file appeal from an ITAT stage. So file appeal before ITAT by assessee or department. Continue. Full stop. Continue. Further appeals to High Court or Supreme Court. Further appeals to High Court or Supreme Court. Further appeals to High Court or Supreme Court. Done. Next, step number 24. Step number 24. Any guesses? That is okay. That is okay. Next. What else can happen? What else can happen, I'm asking. What else can happen? 20. That's 148. Step number 24. Revisional proceedings by. It will happen at any stage. You have time limits of 2 years. Revisional proceedings by PCIT or CIT. PCIT or CIT. I think now they have also included CCIT and PCCIT also. We can check. Right now it's not important. Revisional proceedings by PCIT or CIT under section 263 or 264. Under section 263 or 264. In case the order is prejudicial. In case the order is prejudicial or erroneous. In case the order is prejudicial or erroneous. In case the order is prejudicial or erroneous. Step number 25. Now is what will happen. Final order passed. Final order passed determining demand payable or refund due. Final order passed determining demand payable or refund due. Full stop. Continue. Full stop. Continue. Interest under section. Interest under section. Demand. Interest. Full stop. Continue. Interest under section 220 / 234D. Interest on excess refund. Interest under section 220 / 234D / 244A levied. If it's a demand, you will get 220 or 234D. If it's a refund, you will get 244A. 244A. Full stop. Continue. Assessee pays the required. Assessee pays the required sum. Assessee pays the required sum. Yes. 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 Great. If you come to this position is where you have completed the things. Now this is from an reactive measure. This is from an reactive measure. What and all can you do from a proactive measure? These are all reactive things, people. An activity has happened and therefore these all happen. What if you want to do something proactively? Next step. There's no step. Heading. Reactive measures. Let's see, proactive measures, sorry. Next heading is called as proactive measures. Hey, do you have space after the interest? Little bit. You can add penalty also. Interest under section 220, 234D, 244A and penalty levied. And penalty levied. Done. Next one. What is it called as? Proactive measures. What and all proactive measures can you take, people? Proactive measures as in you want to avoid all this. You want to save yourself before itself. Proactive measures. Point number one. You can do AAR. You can do AAR hyphen for what reasons? Why will you go for AR? Queries. Who will go to AR lab? Bolna. For international transactions. Only after 100 crores, no? It is normally for international transactions, or if it's a public company, more than 100 crores. Technically, it is all for international transactions only. If you notice, the provisions come and say any non-resident can do it, or a resident interacting with a non-resident can do it. So it's technically for international transactions. Yes, international transactions. Point number two. What else? APA. For transfer pricing. Slash scope of total income. Section 9. For transfer pricing slash scope of total income, section 9. Third. Before that, DRC, Dispute Resolution Committee. For immunity from prosecution. That is basically a committee where you will go and say, sir, manachirunga, prachane panniten, kaasu pay pannittu uttrunga, avladhaan. For immunity for prosecution. Next, MAP. For treaty interpretations. What else, people? Anything else? That's all. ICJ, it's a court of justice. That's not proactive. No, how will you go proactively there? Next. Anything else? You can go for compounding for prosecution. That's technically DRC. Same thing. Next. What else, people? You can definitely do Vivad se Vishwas also. Yes, you can also go for something called as MLIs. You can go for MLIs, where technically MLIs is designed by the treaty, but it's a proactive measure where you can also give and make a plea for MLIs. Yes, so you can put in MLIs for amending treaties. MLIs for amending treaties. Yes, last few items. SFT for a section for reporting high value transactions and pre-filing of returns. SFT for reporting high value transactions and pre-filing of returns. Done. Anything else, people? Anything else that you can think of? No? CBCR reporting. CBCR. CBCR is country by country. CBCR reporting slash notification. CBCR reporting slash notification. The last item is TP study. The last item is TP study, or we call it as local file. Or we call it as local file. What is this prepared for? Case study. For benchmarking and evidencing ALP. For benchmarking and evidencing ALP. For benchmarking and evidencing ALP. Sweet? Yes. Now, this is basically your golden rules. If you do all this, is what you will complete your final syllabus. There are a few things here and there also, people like GAR and all those things, but those are nitty-gritties. It's a part of the same syllabus. It's a part of the same syllabus. Now, I have only covered it from income tax perspective. You also have Black Money Act. You also have Equalization Levy. Kind of the same thing. Not a big deal. Not a big deal. This is all done from assessing officer level perspective, so I'm not touching upon it. Yes. Take some time, go home, see the golden rules, compare it with your index in the study material, in the concept guide. Compare it with your index in the concept guide and come back and tell me in tomorrow's class if I've covered everything or is there something missing. Yes, adaketa mari we'll add or subtract things. Technically everything is covered, but I want you to be confident. I want you to be confident. So go through, verify the index and come in tomorrow's class so that we can discuss it further. Yes, great. In tomorrow's class, we're going to start with something called as step number 8, 9, 10 and 11. We're going to start with step number 9, 10 and 11 for the next 2-3 days. For the next 2-3 days before we move on to your... Thank you people. Have a good day.